Good morning, everyone. Like, you at least studied something yesterday. I know it's very tiring to go back home and do some self-study, but still, like, you have only got 1 month for your exams, right? 40 days. 40 days, 12 hours of study minimum a day. And guys attending it on live, very good morning. And we'll finish it off. We'll finish off CMA inter auditing today itself. I went through your financial statements chapter and different entity. It's very easy ultimately because I have not gone through your textbook, only the CA inter textbook. But here it is. It's well written, very easy, like a self-explanatory item. Majority of the items, just read, you'll understand. But I spotted the difficult areas where a bit guidance is needed for you, and different entities also. Many areas are very easy, and they have good morning Nikita, Shweta, everyone, good morning, and Harsh, Anisha, so in different entity they have given lot of items which are not relevant for you, relevant in terms of lot of, like for example, cooperative society, the forming of cooperative society, what the history behind that, all this. You are actually writing an auditing examination. So there only majority of the questions will be related to audit of cooperative society. Not what is cooperative society, what is the composition, nothing they will not ask. But that can come in an MCQ. So everywhere when you are learning CMA inter, always learn the audit procedures, questions related to auditing more. Not just what are the cooperative society, what is it, all that is like irrelevant. So we'll start off with different entity, different types of undertakings, and this is only very small topic like in this, and once this is completed we'll jump on to financial statement. But that is also very easy topic, but bigger. These two, it's a bigger topic, that is only, and one thing I have spotted is that I'll show it to you, then you'll understand. If you study answer for one question, same answer is applicable for 3 questions. So in same, ditto same, not even a sentence or a word you have to change. Same answer. That is how your book is written. So it's very easy to learn, and like hats off to the guy who created this book, whoever it is. At least that is the reason why in CMA you don't see too much people selling different books like in CA. But this book is so good. Why do you need an extra book? So audit of different types of entities. So it means that, for example, audit of educational institution, school. You are an auditor and you go to auditor school. Like here we have SRM University or colleges, Loyola College. You are going to audit Loyola College. So how you as an auditor should audit Loyola College? They are also making money, right? The fees, everything they are collecting. How are you going to audit that? Simple. First is, these are the general audit procedures. Just read it simple, but I'll focus on the areas where questions come, because these chapter and financial statements are bigger chapters. So it's tough for you to learn everything line by line. So let's focus on the question areas, because that is ultimately we need to get marks, right? Understanding everything will not give us anything. Deepthi, Chris, everyone, good morning. So verify, first is, this is a basic thing that before you start auditing in a school, you have to understand the constitution of a school. That is, what are the act related to the school, all these things. Then assess the internal control system of the school, simple. Then consult the minute books of the school. That's only, they consult the budget. But keep that aside. This is the area. I'll focus on area where question comes. How to verify the receipt related transactions. That is, school will be getting fees. Sometimes school will give their auditorium for rent to someone. For example, THARUN'S wanted to conduct a CA coaching in Loyola College. They'll give their premise for us to rent. We'll hire people from, we'll conduct a CA inter batch there. So all these are income for the school. How do you audit that? How you as an auditor will audit income? First is tuition fees. The fees, you as an auditor, how will you check that? Tally the fee receipt with the fee receipt. Just think in your mind. Or school fees, and you are an auditor. How will you check it? Like simple, just think. You got fees. You are a school, you are a management, and you got fees. And I am the auditor. I am coming in. None other pretty verify the fees correct, like books fees correct. Verify. So like even if it's a blunder, it's not an issue. Yeah, simple, number of students, number of fees, and where is number of students and fees written? In the fees register. Simple. Fees collect பண்ணும்போது fees register இருக்குல்ல, அதில் ஸ்டூடெண்டோட பேர், fees register, everything will be written. Same as that here. Tally the fee receipt with the fee register. Simple as that. Just tally. Fee register la 10,000 irukku, inge 10,000 irukku. Like cross check that. Then to see whether they have been recorded. First point. Then check the register to identify whether all students have paid their fees in due time. See whether everyone has paid fees. It's just reading. I don't need even to explain. Simple language. Then if any student has deposited the fees beyond the due date, that is after the due date, if they have deposited the fees, April fees, May 1st, they need to pay that. So check whether the late fine has been charged, because that should be charged, right? Late fine should be charged. So check all these things. That's it. See whether all the collections are deposited in the bank account at the end of the day. Sometimes student may pay fee in the cash. See that it is every day it is deposited in the bank, so that no one can take money from that and do a fraud. Just simple. How tuition fee? Then how admission fee is audited? Schools will get admission fees, right? The donation they'll take. Once you get married, you have kids, you go to school, then you'll see. Because I still remember in my plus 2, no, not plus 2, in my 10th standard, I only had 80 some percent, 81 some percentage only I had marks, and that was in CBSE. But the problem is that I wanted to join in a state syllabus in Kerala. So when you convert from CBSE to state, 82 becomes 72. So then only that is how the allotment process is done. So I will never get a good school. 82 also will not get a good school. If there are a lot of people about 90, at least 30-40% of the 10th standard students are about 90. I was only at 80. So I never got admission. So my parents went to one school, the famous schools there, and one Sunday, that is like owned by a missionary, like a church or something. So they called us for this one discussion at their home, the chairman or someone's home, and they asked for, it wasn't for plus 2 admission, the higher secondary admission, they asked around 80,000 something donation. So similarly, these donations they will receive, right? Admission fee, donations, everyone. How as an auditor you will check that? First thing is, check that the admission fee with the admission, this is admission fee, not donation, this is admission fee signed by the head of the institute. Check that the admission fees with the admission slips. Admission fee 10,000 you receive, you will give slip, right? Check both, same as here. Sign and see that whether it is signed by the head of the institution, and confirm that the amount has been credited to the capital fund. It is actually not a revenue income. It is actually like a capital income. So see that it is credited to the capital fund unless the management committee has taken contrary. Simple. Then some other fees, some hostel fees, some library fees will be there, right? So how will you verify that? Verify the collection such as library fees, all the other fees based on the counterfoils. Counterfoils means when you receive money, you will give some voucher like thing, you will write and tear it and give it. That is what we call counterfoil. So based on the counterfoil and fee registered, and ensure that fees has been accounted proper heads. Simple. Then this is a question which can easily come. This one, then this one, and this one. These three from, you don't have to study anything else, like these higher areas, everything, just leave it. Either they'll ask how to verify the receipt related transaction, or they'll ask how to verify the payment of schools, or they'll ask how to verify asset and liability of school. Simple. Then see that all the arrear on account of fees, fines have been taken into consideration. All the arrears means which are things as, for example, a student has to pay fee every month. He has not paid fee for the last 3 months. That is what we call arrear. So see that all the arrear fines, everything. Then see that free studentship and concession have been granted by person authorized to do so. Free studentship means some students may be from a very poor background or something. So the institutions may say that you don't have to pay fees, you come and do the free, we'll give you free classes. That is what we call free studentship. So free studentship or some concession, 10,000 is the fees, management told you only pay 8,000, no problem. So to some poor student. So all that case should be, make sure these concessions, discounts, everything given is given by a proper authorized person only. The cashier or the accountant cannot do that. It should be done by a senior manager. Make sure that. Then confirm that hostel dues were recovered before the students' accounts were closed and the deposits of caution money refunded. That is, when you join hostel, you will pay the caution deposit, right? If for 3 years you are joining in a hostel, you will pay 10,000 as caution deposit. If you damage their bucket or some wall or some tap or anything, that money will be deducted from you. That is caution deposit. So once a student vacates the hostel, after 3 years of college, this caution money has to be refunded. Or if he has not damaged anything, the 10,000 has to be refunded. So make sure that that student has paid all the dues first, then only repay this money. If the student has not paid all the dues, hostel fees, everything, he has not paid some month's fees, but you repaid the caution deposit, then how will you recover the money from him? He will go. He will not come back. So make sure. So if the student has not paid fees or anything, deduct that money from the caution deposit and give the rest. Simple. Then verify the grant received from government. If the schools has received any grant, verify that. Simple. Then ensure that the donation received and recorded properly in the books of accounts. Check the income from letting out institutional properties. Institution had a hall, like a very big hall. They gave it on rent for some event. So check that income from that has been recorded. And that should be recorded under which head? I'm just asking one question from accounts. School has a property, like a hall. They gave it on rent to some for THARUN'S Brainery for conducting a CA enter class. So the school will receive 10,000 per day, 3 days, 30,000. That income should come under which head in pre-annual account? Simple, just think. I'm just checking your accounts background. That is an income for school, right? So there are only basically 2-3 heads in income side. First is revenue from operation, then it is other income. So other income. I was just checking that, your common sense. So it is like a non-operational activity of the school. So Sudarshan Shivakumara, bro, I am also Sudarshan. Good morning. Then like I was seeing it's very rare. Anisha, you good job, like you told other income. So like I have not seen too much people with my name. That is like suddenly like Sudarshan Shivakumar. Then vouch the income from endowments and legacies. Endowments means it's something like a donation, and legacies means sometimes these bigger film actors, these people, the thing is that they may have a lot of assets, but they may don't have a family or something. So once they die, they'll write a will. Like for example, Ratan Tata had like written some will. Some of his properties will be donated to Tata Trust, something like that. So that is what we call legacy. Once someone dies or when someone dies, he'll write a will and keep it, his properties for. That is what we call legacy. So all the endowments and legacies, as well as the interest and dividend from investments also, in respect, inspect the securities in respect of the investment held. Vouch the income from endowment and legacy. Sometimes some famous personalities may give their income to school once they die. So one school will get that, right? So all the legacies and endowments, auditor need to vouch their income. Plus, school may have investment in certain, for example, school has investment in a shopping mall. So rent from shopping mall will be coming for school, right? Auditor has to see that. That's it. Check that. Then this is the main area. So here basically high focus should be given on tuition fee, admission fee and other fees. These 3 you have to memorize and keep it. Then other 4 more points. That's 7 marks. Study 8 points and keep it. Even if you miss one, you will have extra one. Then here we have 10. Cut any 2 that you want. Then how to verify the payment. School will make payment to different people. Salary to the staff. All these payments will be there. How you as an auditor will verify that? Because your job is to check. How will you check that? First is verify the salary and wage paid to the employees and check the calculation and accounting of arrear salary. See whether the deductibles from the salary such as PF, tax, everything has been deposited in the due time. Just verify the salary that you are paying. Just cross check. 10,000 for it is written as for a teacher with 2 years of experience, 10,000 is a salary. Teacher with 10 years of experience, 30,000 is a salary. That is the law. See whether that has been actually done. Actual payment is also like that. Then sometimes because I'll tell you this, in the schools, because I've audited certain schools like that. The thing is that these people, it will be run by a very good membership, a very good trust or some church or some temple or something. But the issue is the management people in the school may be like a fraud guys. Ultimately, they are not using it, they'll be using it for their own advantage. So what happens is that the law made by these people, the owners, the trust, they'll say that every teacher should be paid a minimum salary of 20,000 rupees and every month there should be some incentive of some extra hours if teacher, all these things will be there. But these guys will not pay that. So as an auditor, check whether everything is proper or not. All the verify the salary payment, whether all the salary has been paid. Sometimes other thing is also there. They to increase the expenditure. In the P&L, when expenditure increases, profit decreases. So tax is also reduced. All these things are there, right? So sometimes, or not only for the tax benefit, these schools, what they do is, these management people will put dummy employees, not original teachers. 10 teachers may be originally there. They'll put 3 more extra teachers and they'll show salary given as cash or something and they'll take the money itself. So as an auditor, verify all the salary, wages, everything. I'm just giving you like practical examples on this, so you'll remember when school comes. Then examine whether all the expenditure associated with the special events like seminar, symposium, whatever, I don't know what it is, has been accounted by matching the expenditure in regard with that. All the seminar expenditure, anything, school conducts a seminar, pays expenditure, match it with the counterfoil, that's it. Then vouch all the all regular expenses like electricity, telephone, everything. Vouch purchase of fixed assets expenditure and see that it is properly capitalized also. That is, company may spend expenditure, school may spend expenditure for AC, everything. It is a capital expenditure. See that it is in proper capital head. School may also send, thanks, some revenue expenditure also, like buying some chalk, duster, all these things. See that goes into revenue expenditures. See whether the head is proper, check whether everything. And do you know what is the meaning between vouching and verification difference? Vouching is one area, then verification is also there. Don't worry, like the exact thing is coming here. I'll tell you there. That will be like understand, not needed now. Vouching, because I am focusing on the basic stuff. Some students may not know all these things, the simplest area. I'll tell you, in my case, auditing, when I cleared CA Inter, I never knew the basics of what is vouching. I've done that in articleship, so I know that. Verification also we have done, but some basic meanings like what is an assertion, simple stuff I don't know. So when I went to final, it was very tough for me in the initial stage. Then I decided, because I took a coaching class, but class was good, but it was very tough for me to, because basic stuff they were not addressing, so I was not connecting properly. Then one day I shut down the class. Then around 2 to 3 months it took me to study auditing in final. Normally it's 1 month job, but I looked at the each and every word meaning, every single word meaning. Every meaning, and that time GPT was also not that popular. GPT I think was not even there, I guess. I was not using it anyways. So I'll go to Google, I'll go to YouTube, search every meaning. Then once I start understanding all the meanings, then auditing is very easy, because you understand the sentence meaning. Now learning is very easy. Without, just do one thing. This chapter you understand the meaning. This one education institution. One chapter I will not teach, or one area I will not teach. Just go and study from there. Then you will understand the difference. Once you know the meaning and once you don't know the meaning. Then the purchase of fixed assets, capital, all these things you need to check. Vouch the refund of caution deposit from student based on the receipt and accounting records. Refund of caution deposit. Refund means school is paying back. So verify that. Then there also fraud may be there. Some students, the hostel people may be refunding the money in some schools or colleges. There also they will do this fraud. Some hostel people, what they do is this hostel warden or these guys, smaller schools, everything. They'll tell to the students that you have damaged the tap, pipe, etc. So 10,000 from the 10,000 caution money, I'm deducting. In my case, in my college, my caution money was deducted. I know that because we used to, I cannot say YouTube going live is there. It will be record, else I'll say that. My caution money was deducted. Some 2,000 rupees or something was deducted. I still remember that. Then that was not for this damaging anything, but for some other issues. So this warden or something, the hostel warden, what they do is that they will, for me it was not hostel due, sorry, it was like other dues. In college we have caution deposit, not hostel. So because I did not stay in hostel, my home was near. These warden, what they do, they'll tell to the students, you damage the tap, pipe, everything. So from your 10,000, I will give only 6,000. So the student may be afraid, at least 6,000, whatever I get, let me leave. Let me go and have a party with that. Because parents will forget that money. Student will have that money once. So he'll take 6,000. Rest 4,000 will be there. And do you know what this warden will do? They'll just ask the student, just sign it here and go. Student is not an educated guy, like a small, like second year plus 2 guy. He'll sign it and go. And warden will put there 10,000 is paid. He'll take the 4,000. This happens. So as an auditor, verify all these things. Then then see that the investment representing endowment fund for price. This is one more important thing. Some bigger people, like you take Ratan Tata for example, these people, what they do is they'll donate some money, for example 10 lakh donation, or they'll give their legacy, I told you, right, the will, they'll give it to the school and say to the school that you can use this money to give prizes for the students. If a student wins a 10A plus or all these higher marks, 95%, give them prizes. School will give prizes. You can use this money, whatever I give. Imagine they give 10 lakh rupee. You can use this 10 lakh rupee to pay prizes. So how the thing works is that the school will deposit, school cannot take money from this 10 lakh. They'll deposit this 10 lakh in a bank account. And whatever interest they get, sometimes every year they'll be getting 1 lakh interest, 10% interest, imagine. So that 1 lakh interest can be used to pay the prices. So 10 lakh will be there as a deposit, interest will be, you can take. So that in that case, you as an auditor need to check whether that interest, 1 lakh interest is coming, whether that entire 1 lakh has been used to pay the prices. If not, sometimes 60,000 price was only needed that year, paid. Rest of 40,000 is reinvested back into the 10 lakh. Make sure you are as an auditor. That is what is written here. See that investment representing endowment fund for prices, see that first it is kept in a separate account, and any income in excess of prices, 10 lakh, 1 lakh we received, price was only 60,000, 40,000 is excess. Excess has been accumulated and invested along with the corpus. Corpus means the 10 lakh, invested with 10 lakh. So that's it. Then this is easy, right? Even if you read your own, you will understand. Just the meaning of this endowment, legacy is etc. is what is, where you need my guidance. Then verification of assets and liabilities. Access exam. Accounts exam, but watching this, so bro, you're doing CA. You are having accounts exam and watching CMA exits. The exam will start in like 3 hours, right? Go and study something. I believe that buyback question from your accounts will be asked this time. Just study. Just take the 12th question from your buyback and study. I'm just simply saying, bro, just don't comment that it has come. Some guy who is having exam today is watching CMA lecture, CA inter exam. And are you doing CMA? This account called Fund Timer. What is your name then? Anyways, let's verification of assets and liabilities. We talked about how to verify the receipt of school, how to verify the payment of school. Now how to verify the asset and liability, bench, desk, AC, whatever they have, school bus, all these things. First, conduct the physical verification of tangible assets, assets which we can touch, as shown in the fixed asset register, and verify the investment based on investment register. This one sentence you keep in your mind. Conduct a physical verification based on fixed asset register, and for investments, the same sentence you can use in every question that is asked for assets and liability. In other areas also, same point is there. That is the beauty of this chapter. Don't leave this chapter. People immediately, CMA, I talked with a few students, they don't study this chapter because it's very big. 3, 4, 5 units are there, and studying this for max to max 7 marks is a foolish thing. They are considering as a foolish thing. This is very easy to learn, first thing. Second, all the points, majority of the points are repeated. Easiest chapter in your CMA is this one. Easiest chapter, no technicality. Then conduct the physical verification of asset. Go and touch and feel all the school bus, all the AC, whether everything in fixed asset register it will be written 10 school bus, 10 AC we have. Go and see whether 10 school bus is parked, 10 AC is there. That is physical verification. Then check whether the depreciation amortization has been properly provided. Depreciation is for tangible assets, amortization is for intangible assets. Same item. You know that, right? Amortization. Then verify the refund of TDS in respect of interest on investment. If there is any TDS, verify refund if any. Not 100%. So carefully examine all the outstanding liabilities such as electricity, telephone bills, outstanding. Bill came, we did not pay, so it is outstanding. Examine that. That is liability, right? Outstanding expense. Then verify the inventory of furniture, stationery, clothing, provision of all equipments, etc. School may have furniture, sometimes not furniture, this stationery products, pen, pencil for the students, chalk, all these things. It will be in stock and they will be selling this to the students. That is, then only it will become an inventory. When will something become an inventory? When you are selling that product only, it becomes an inventory. So always keep that in mind. Sometimes school may have uniform. School itself will be selling. That is an inventory. School may have provision like some snacks or something. So all verify all that. Inventory is an asset. Always keep in mind. Then one more point, simple. This much is enough. Ascertain that the system ordering inspection on receipt and issue of provisions, foodstuff, clothing, etc. And other equipment is efficient. The system ordering inspection in schools, they'll have a system to check all these things. So make sure it is efficient. That system is functioning properly. That's it. So education institution is done. 3 topics. Structure it in your mind. How to schools payment, verify school payment, schools receipt, assets and liability. 3 topics. School is there. Structure it like this in your brain. Then school is done. So I'll give you a structure for this chapter for revising. When you finish this chapter, first is different entity. This is a chapter, right? First we will go with like educational institution. Here we have 3 topics. This is how you need to make a structure for most of the chapter which you can. So in auditing, the number 1 problem is when you go to exam, you don't have to write, don't worry, like once we finish everything, then you can easily write, or if you want you can write it now also, that's not a problem. Just say. So number 1 issue is that in auditing, students will study everything, but when examination comes, same question, they may know the answer, but they may think, was that or the answer, this or the answer. That is because they don't have structure, from which topic, which question is asked. So I always advised everyone to make a question sheet. You have 40 days. Question sheet means every chapter, once a chapter is done, you finish off studying a chapter, take a piece of paper. So you only have nearly 10 chapters or not even 10 chapters. So make for every chapter 10 pages. 1 page, what are the questions in that chapter? Just write all the questions. MCQ, let's leave it. That we will do after. First focus on descriptive. So if this chapter, audit of educational institution, what is verification of payment, verification of receipt, verification of assets and liability, question mark. And if you made any mnemonic for that, like a short mnemonic abbreviation, write inside of that. So what happens is, and stick it onto your wall. Every chapter, stick that paper onto your wall. So this phrase, your entire auditing is done. Just revise from that daily when you will never forget, because when you're reading from a book, normally what happens, if you're revising this chapter, you'll open this chapter, then you'll first close the answer thing, then verification of liabilities, I'll think. But before closing the answer, 1 second you saw the page. So this page picture is now there in your mind. So you can easily recall the page and you will say the answer. But in examination this comes, you cannot recall, you may not be recalling the page. Now if you're recalling directly from book, you will just see the page first, then only you will be closing the hand, right? That is a problem. Don't do that. Stick it onto your wall. Their answer is not there. The page you are not seeing. Then recall from there. Then you will know whether you are getting this or not. So when in exam also, question only will be there. No page, you cannot see the page. And from the question, you have to think on which page it is there, which mnemonic it was that. So always focus on a question sheet. I will show, I think I have the pic of my question sheet that I made in CA Inter. This is CA Final. This was like, for every chapter I had things like this. This is a chapter called peer review in CA Final. When I was studying. So I used to make like this. Definition of peer review, objectives of peer review, scope of peer review. Like this I used to make, every chapter I had this. 1 chapter had around like 13, 15 questions. These were all the mnemonics I made for myself. I had one wall and one, what we call this, cupboard thing. Entire auditing was there. So it was very easy. I never got confused in CA because there are a lot of questions are there, right? So try to do that if it's difficult for you to recall from the book. Just giving a suggestion. Now we have audit of healthcare organizations. The hospital, simple as that. Healthcare organization. How do you audit a hospital? Basic stuff. Like we'll understand the constitution, internal control, same. If they directly ask you how to audit a hospital, how to audit it, write these points also. Don't just write this one. That will be like a very big question. But these 3 points, because this is common for every educational institution also, it's common. This also is common. These 3 points. Then now how will you verify the sorry, I forgot to draw here, right? Here we will write first how will you verify the how should I write it again? Alright. How to verify receipts, payments, assets and liability. Now we will get the structure will be there. So when exam comes, you can easily know in educational institution only these three topics is there. So the topics of every chapter will be in your mind. Structure will be there proper. Now it is hospital. In case of hospital, how will you verify the receipt? What are the receipts of hospital? Just tell me. Just from your, I'm just checking your patient admission fee. Next. Medical, like medicines fee. Next. Insurance they will get, like operation, everything done, insurance they will get. Then blood test, scanning also. These kind of things are there for the hospital. You as an auditor, how will you verify that whether it is correct or not? Because hospital is the area where it's very easy to do the scam and all these things. So because no one will bother when a bill is given for like a medical reason. Everyone will try to pay. Even if the poorest family, he'll sell his gold and he'll pay the medical bill. So that is an area where all the exploitation happens. The insurance fraud will be there, Lord, because there is a movie called, if you get time, watch it once your exam is over. In Malayalam, Mugundanunni Associates. That is a movie. Have you seen that? A cult classic movie, right? It is a killer movie because there the game is, he's an advocate. So what he'll do is that the hero is an advocate. So when an accident comes, like a genuine accident, like I fell down from a floor or something, some normal accident, my car accident or bike accident or home accident, whatever it is, when a patient comes to the hospital, he'll go there, he'll tell them, and this patient may not have the money to do the scanning, operation, everything, like 2 lakh bill will be there. Basically 1 or 2 lakh bill you will get if your leg is broken. So this advocate will go to the patient and tell, just do one thing. You don't have the money anyways. I'll give you the money. You just need to sign in certain papers and I'll give it through insurance. This patient don't have any insurance. What they're doing is that they'll make this like a car accident. Some car, they have a lot of car with them. So it's like one car has accidentally crashed this person and when a car crashes someone, the car insurance need to pay to this party, right? So that is how they'll loot the money. They'll loot 5 lakh and 2 lakh to the patient and 3 lakh to the advocate, happy. And 1 lakh divided to all the attender, staff, police, everything. That is how it is very easy to do a fraud in a hospital environment. That's a cult classic movie. You have to watch it. It's a negative movie. It is actually motivating us to, it is actually telling us that you cannot live a happy life properly. Do something negative, then only you can do. If you want to win in life, kill someone. That is the kind they are telling in there. Because there is a scene in that movie where his friend, one of his friend says to him that I need a share or something. Immediately he is crashing the car and killing him. It's as simple as that. He'll say I'll give the share, and there is another competitor of him, another senior competitor of him who is doing the same business. And he noticed this business from this guy. And he now has to eliminate the other guy, right? What he's doing is he'll put a king, like a cobra in his car. Then kill him. It's a super movie. Sir, can you provide the weightage of chapters? I'll have seen in your YouTube videos, sir. Killer. Deepthi. So, Anisha, I'll try to give you a weightage. Let me analyze all your papers for the last 3-4 years. Then only I can conclude on my weightage, exact weightage. But don't worry, I'll give that in the Telegram channel. Make sure you join my Telegram channel. I'll communicate that. Like in the next 1 week or something, I'll see what weightage can you expect from each of the chapters. Mostly, I would say, different entity will have a question, 7 marks, because many units are there. So, one more thing is that study, because this is only 50 mark. Your main focus should be on accounts. That is the area, right? But I am saying, in this 50, you need to get at least 30. Minimum 30, 32, 33. And accounts also, you get 30, 32, 60 marks. It's done. Your paper is done. So, to get 30 from this chapter, this auditing, different entity is the easiest chapter to get it. Financial statements I won't advise because a lot of content is there. It depends upon your time. Only 7 marks, or even if you get 2 questions from financial statement, 14 marks, still I would not advise. It's a very big chapter. You do it at the end. Once you finish everything, if you have time, go with that. So, different entity 7 marks, sure shot you may get. Any something, hotel, hospital, education, and that 7 mark is, can get precise 7 marks. Same points you write, there is no way to cut marks. Study it properly. 7 marks from different entity. from the company audit portion we learned yesterday, all the portion, the company audit, cost audit, secretary, that is the core of your auditing. You will minimum get 3 questions from that area. Company audit, cost audit, secretarial audit, then other NFRA, internal control, many things are there, right? Total, you will get at least 2 to 3 questions from that. So this plus that itself is like 20-25 marks question is done. Then go with the basics. The basic things like auditing, the first day what we taught, that is area. First preference I would say to different entity, because it's easy, no technical terms, no complications, simple. In CA Inter, different entity is very tough, because a lot of things are there. Here it is only few things are there, it's very easy. Then how to verify the receipts, of hospital. First, if hospital is run by the state government, vouch the grant received from the state based on government orders. Hospital is run by the government will give grant to the hospital, verify that, simple. Vouch the collection from patients admitted based on the patient admission register. Collection means money you receive from the patients, verify it with the patient admission register. Vouch means, you know, right, what is vouch and verify. Vouch means if there is one expense written in the book, there anyways one expense will have a bill. You cross check whether the bill amount itself is written here. That is vouching. Comparison of two. Verification means you are going and inspecting. Verifying assets means you will go see the assets, whether it is working properly. We will touch and feel sometimes. That is what we call verification. Vouching and verification. Vouch collection from various pathological tests based on the counterfoil of receipt. Like you told, lot of tests are there, right? Blood test, adella verified with the counterfoil of receipt. Money received from the test, see with the bill given to them. Then vouch the donation based on counterfoil of receipt, counterfoil of donation. Counterfoil means a receipt, bill. In case hospital have guest houses, assess the collection based on the register. Because in Kerala there is one hospital called Amrita. There they have some sort of a, patients normally come and stay inside the hospital. But there is a guest house for people outside the hospital also. And there the relatives can stay. Some patients, if they want 2 or 3 relatives, because they will be admitted in hospital for a liver transplant. They will be admitted in hospital before transplant at least 2, 3, 4 days. After transplant for 2, 3 weeks. So patients, relatives also want to come and stay. Guest house will be there. So money coming from the guest house also you have to verify. Then interest and dividend income should be vouched with reference to investment register. Same. Then legacies and donations received for specific purposes, ensure that any income from that is not utilized for any purposes. Some Ratan Tata gave donation to a hospital to say that, to unset, like imagine 5 crore rupees donation to the hospital or something, any money or this, whatever it is. And the condition is that only use it for cancer patients. For cancer, for people who don't have money, for cancer treatment only use it. Don't use it for liver treatment or anything. So, as an auditor, make sure that that money is only used for cancer. Make sure it is not used for liver or anything. Check that. Then, this is how to verify the receipt of hospital. Now, how to verify the payment of hospital. Hospital has to pay fees. How to verify that? Verify that all the capital expenditure associated with the machines, furniture, vehicles are approved by documentary evidences and see the invoice. All the capital expenditure to buy the scanning machine, make sure it is approved, the proper approval of the senior person is needed. Check that. Vouch the salary paid to the staff based on the attendance register, payroll, etc. Verify doctor's remuneration based on list of visit and operations performed. Normally, some doctors may charge salary, like a junior doctors. But if you are a senior doctor, you are so good of a surgeon, you are a really good surgeon, you will have a base salary, like 10 lakh or 3 lakh or something per month. Plus, you will also get a commission based on operations you do. If you do an operation, the bill is 10 lakhs, you will get 3 lakhs, something like that. So, verify all these things, doctor salary, all these things with the counterfoil bills, number of operations done, because sometimes it is shown as payment made to the doctor, salary in a year 1 crore, commission for operation is 10 crore. And now you have to see whether that much operation has been done by the doctor or not. See that. For to get 10 crore commission, he may need to do 100 operations. So check whether 100 operations you have done or not. Then verify the purchase of pathological test, the PP kit, all these things we will buy, right? Some to put it on the nose, COVID test, all these things, right? All these things hospital will buy it first, then they are giving it to us, right? So when they are buying, they are paying money. That is we are verifying payment. So verify the payment related to that also. X-ray plate, all these things. That X-ray sheet you get, all these things. Then vouch all the other overhead expenses. Overhead expenses like the telephone bill, electricity thing based on the bill, documentary evidence. Simple as that. Assets, it's almost the same. Just read it, you will get it. Then physical verification, adequacy of depreciation accounting, list of all liabilities. So then stock register of medicine. This is only the extra thing. That is also done. So it is same item. Same educational institution, we'll use different word. What is it? Hospital. Hospital also same. Receipt, payment, assets and liability. It's very easy. Then next is bank. Bank is, it's not tough, but some area. These areas, everything you will read, you will easily understand. Simple points are there. But these are the areas where you will require me. Bill payable verification, contingent liability verification and bill for collection. I will explain this after everything because it's a tough area. Other things bank you can easily understand. It's nothing. Bank will verify after, study after that. Cooperative society is nothing. It's very easy. We will study cooperative society. Societies will be there. You have lot of societies nearby your home, all these things. How you as an auditor will verify cooperative? Huh? Oh, you missed that. Sorry, let me see. There is audit of bank. Hospitality. Okay, that is very easy. That I will teach you. 1 second. That is the easiest thing. Everything is that is where I told everything is copy paste. Nothing we need to study. Just study answer for 1 question. It's done for 4 questions. So we'll finish. Hospitality will go. Sorry, I missed it. Now finish off cooperative society then. This is the statutory requirement of cooperative. Just read it for MCQ purposes or anything. It's not relevant because I told you they have written so much thing about cooperative society. Who requires that? Your exam is auditing. So auditing about how to audit a cooperative society will be asked, not how composition everything of cooperative society. But in MCQ they may ask all these things. So first is the following. Audit related items only we need to study. Other things read and go for MCQ. Sometimes in the 7 marks many questions are there, right? 1 question may be related to something like this. All the other majority of the question, not majority, 90% of the questions will be auditing based. Qualifications of the auditor. Only a chartered accountant can be auditor of this one society. Appointment of auditor, appointed by the registrar of cooperative society. Audit fee paid by the society based on the scale of fees prescribed by the registrar. Book of accounts. These books cooperative society need to maintain. Cash book, stock register, register of assets, register of fixed deposits, register of sureties. Keep just the heading, keep in your mind. Don't need to overcomplicate it. If the question comes, write the headings directly. At least you will get half of the marks. Then write it in one language, your language. Then register of surety. Surety means in case of a cooperative credit society, loans are given against a personal security of members also as surety provided by 2 or other members. Register of sureties will give particulars about the number of borrowers in respect of which members are stood as surety. Means in cooperative society, imagine a cooperative society, 10 members are there. If cooperative society may give loan to outsiders also, not only just members. I am a member of a cooperative society and you want a loan. You are not a member. So I will tell the cooperative society, he is my friend, give him loan, I will give the guarantee. If he doesn't pay, I will pay. This is what we call a surety. So register of surety means in a register, all these kinds of things will be mentioned. Like Sudarshan has guaranteed for him. That thing will be mentioned. That is register of surety. Then restriction on shareholding. No member in the cooperative society can hold more than 20% of the total number of shares of the society or such a number of shares in value which exceeds 1000. That is a cooperative society, 1000 shares. Imagine 500 shares are there, not 500, 100 shares are there in a cooperative society. One individual can hold only 20%. That is 20 shares maximum. And one more thing, number of shares held by the company, held by a person should not exceed the value of rupees 1000. Then restriction on loan. A registered cooperative society can only grant a loan to its members, though with the approval of the registrar, it may grant a loan to the other registered cooperative societies also. The auditor should see that the loan granted by the society are in conformity with the provisions. Loan can be only given to member. Make sure it is done like that only. Simple. Restriction on borrowing. A cooperative society may accept a loan or deposit from its members as well as non-members. Then investment fund. Society may invest its funds in any of the following. These are the places where society, if they have excess funds, they can invest it here. Any security specified under section 20 of Indian Trust Act, not relevant. Any share or security bond of any other cooperative society, any bank, all these things, just read it. Appropriation of profit, this may be, they can ask this is one area. Appropriation of profit, 25% of the profits of a cooperative society should be transferred to the reserve fund before distribution of dividend or payment of bonus to members. Cooperative society had 1,000 rupees profit, imagine. So 25% of that. From this profit, they pay dividend to the members. 1,000 rupee profit, from the profit, they pay dividend to member. But before paying the dividend, they need to transfer 25% of money to the reserved fund before distribution of dividend or payment to member. However, registrar may reduce the percentage of the profits to be transferred, but in case he cannot reduce below 10%. That's it. Simple. Cooperative society has profit. They need to give dividend to the shareholders, to the members. Before even giving dividend, transfer 25% first to this reserve fund. And registrar has the power to make the 25% 10%. He can reduce that, but max cap is 10%. He cannot reduce beyond that. Transfer first to that, then give rest amount to the dividend. 1,000 is there, 250 transferred, 750 you can give it to this dividend. Then contribution to charitable purpose. Contribute an amount not exceeding 10% of the net profit remaining after the compulsory transfer to the reserved fund. And here the only thing to focus is appropriation of profits. Then restriction on loan, all these things. Just keep in mind that they can only give loan to the members, all these things. Books, there is nothing else in this area to study, and one audit procedure is there somewhere. Here. This is the area to study because this is auditing related. This area. General points, how to do the audit. While conducting audit of cooperative society, auditor need to look into the following. What are the area? Carefully go through the bylaws of Carefully go through the bylaws of the society. See that they are being observed in letter and spirit. Rules will be there for a cooperative society. See that it is followed in every condition. That's it. Examine the register of members and individual shareholding. Test check the internal check and internal control system operated. Simple. So this will be the question. If they ask audit of a cooperative society, from here till all the points you write, because for you it's 7-mark question. It will be 2 or 3 marks for this, 2 or 3 marks for this, and 2 or 3 marks for the general points also. Audit of cooperative society, write everything. Other points you just read in others. How to audit the income of cooperative society. Audit the income. Carefully vouch the receipt of a cash received on account of share capital vouched with the register of member. Simple stuff. Cash received against a sale should be vouched with the invoices. You read it. Just needed to read only. I don't need to explain that. Then vouch all the expenditure with reference to authorization. This is audit of expenditure. Authorization from managing committee, particularly in case of large capital expenditure. Whether cooperative society has incurred an expenditure, make sure it is authorized by proper management. That's it. Vouch payment of loan from loan agreement, vouch establishment expenses, and reference to the resolutions of managing committee. Simple. This is not a very tough area. Cooperative society. Now we learned cooperative society also. Cooperative society. In cooperative society, basically there is nothing like this. Just in cooperative society, learn it as one. Just one audit procedure, because they will not ask audit the income of cooperative society. This is just 2 points is there. They will not ask like that. If they are asking cooperative society, they will ask audit procedure for cooperative society. Everything you have to write. How to general points, expenditure, income. So directly you also study also like that. Audit procedure for cooperative society. There you have general points, income and expenditure. Simple. Then where was the next thing? Cooperative society is also done very easy. It's local self-government, that is what we call municipality. That is too easy. Here also, this I don't even need to teach you, read it, you will get, but still I'll just read it once. Any point you don't know the meaning, just tell me, I'll explain. Municipality, this is audit of local self-government, the municipality, panchayat in your local town, right? That is this thing. Then after this, we need to go to bank is there. Bank, you need so much of explanation. Bank is an explanation area. Yo, teaching. The major objective of audit of municipality and panchayat, ensure on the fairness and correctness of content in the financial. This is the objective of auditing. Why you should audit a municipality? Why? What is the objective behind that? To ensure fairness and correctness in financial statements, content in financial statement, report on internal control, ensure value of money is properly utilized, to detect fraud and error. You don't even need to study that. If they will not probably will not ask you that, but just 4 points if you want, keep in your mind, because luck may not be in your favor all the time. Accordingly, this is the area. If they are asking, they will ask this one. This area. This is the audit procedure, basic audit procedure. So, auditor is supposed to consider the following general points in auditing. Appointment of the auditor is in line with the respective regulation of the local body. Municipality may say some rules regarding appointment of auditor, make sure it is followed. Obtain a detailed understanding of the rules and regulations that govern the operations, especially the financial control of the organization. See, understand the rules, that's it. Consult the relevant documents, minutes, resolutions and various meetings, simple. Then check the utilization of grant, appropriate authorization being maintained throughout the adequacy of accounting. Check the utilization of grant, that much is enough. Apply in-depth investigation in areas with potential fraud. This is a important area, because in local panchayat, municipality, everything, have you ever thought why these local politicians in your local panchayat, to win in that local panchayat, to become like a panchayat member, they are spending nearly 1 crore for all the poster elections? Because you may think the party is donating this fund, party may be giving 25-30% of the expenditure only. They themselves are spending 50-70 lakhs on this to win a local election, not even an MLA. MLA need to spend 10 times more than that. To win a local election, not everyone I am saying, these fraud people are spending this much amount. Have you ever thought why they are spending this much amount? Their salary will be like 30,000, 50,000 or something. Why are they spending 70 lakh to become a panchayat person? There, they can do the fraud. Simple as that. That is for a road construction of panchayat, they will get the fund. So, as an auditor, when you are auditing a panchayat, do the in-depth investigation in areas with the potential fraud. For a panchayat, the in-depth potential fraud area will be construction of a road, a bridge, contract will be given to some area, or some revenue collection of tax collection will be there. All those areas will be the fraud area. You have to check that. Then, whenever there is a provision of fund, ensure that expenditure is incurred from the provision authorized by the competent authority. For to give some, this backward society people will be there in panchayat, like some poor people or something. So for them, for their welfare, to giving them food or something, panchayat may have set a provision, fund aside, 30,000 aside. So make sure money given to them is from this provision only, not extra or not from any other thing. Auditor has to check that. Because in panchayat and all, accountant will not be really good. So what happens? The president will put a provision, like 1 lakh rupees has put as a provision set aside to pay the poor people. But the accountant may, when the actual expenditure comes, he may debit it from other, in any head, like cash in hand or something, he will debit. That should not be done. This should be gone from this one, provision only. I don't know, cash in hand should go and debit anyways. Ensure that where huge financial expenditure is involved, the scheme are running economically and is expected to generate the targeted outcome. A panchayat constructed a park. For constructing a park, anyways, like 30 lakhs or something will be needed. The slide, the kids park, everything. And the panchayat, these people may not be chartered accountants or cost accountants or anything. They may not have the knowledge about the finance, how to calculate the feasibility of a project, anything. So they will blindly spend money. They will blindly spend money like 30 lakhs, let it be on. And for example, simple example, I am saying, there is a statue, the Statue of Unity, like in Gujarat. I love that thing. That is on the revenue purpose, that is a foolishness. But in terms of India as a country, that is the biggest thing. Two aspects are there for, that Statue of Unity. When Statue of Unity was constructed, everyone was criticizing Narendra Modi for saying that the fees is only like 300, 500 rupees to go and see that. But that is something which can be seen from 5 kilometers away also. Why should someone pay money to go there and see it from like this? And at the bottom you have to look like this to see that. What is the reason for that? They'll stand away like 1 kilometer away from there and happily see that. Like a tall figure, they can take stand. So who the hell will come and pay the money? So visitors are also like very less coming compared to the money spent to build that. So in a revenue terms of point of view, and that also requires maintenance, a lot of salary given to other people around. So revenue, it will take years to break even that. So on that point of view, that's a foolishness. They would have spent that money on something else, construct a shopping mall or something. 3 years they would have break even the money. So like they could have constructed 10 shopping malls with that money. But in that area, I'm criticizing that. But there is another area where I appreciate that. As a country, we need something. Because now the world's tallest statues of us. We are having that, right? That privilege came to India. That is a very good thing. If just imagine if you never had Taj Mahal, Qutub Minar, or all the Lotus Temple, then why will tourists come to India? When a tourist come to India, only the foreign exchange money will come to India. Then only India will go up. So on that point of view, as India as a country, it is so good. I would love that decision. But economical standpoint, it is not. So for Panchayat also when a Panchayat is doing something, why the hell we should think about that? It's like a local Panchayat, nobody cares about that. Sometimes there is one thing that these Panchayat people do. I'm giving you examples so you can relate more. I've observed all this. I'm a really good observer. I observe everything. In Kerala, like near to one of my area, when I was living, like 10 years back, that area, there was a restaurant constructed by some person. Restaurant is a local restaurant, like for lunch, everything. And it's like around 20 lakh construction cost for the restaurant. Decent restaurant, food was also decent. And 3-4 buildings of that near to that restaurant is also owned by this one person itself, owner of restaurant itself. And suddenly I saw a park coming there, like a park and a wellness center, like for the kids, things coming there. I thought, why the hell it is coming there? It should not be there in that area. Then the Panchayat member, he constructed the park, everything. But then only I realized the Panchayat member and this guy, the owner of the hotel, are friends. So when a park comes there, hotel will get business. When hotel will get business and park is also there, these other the shops of this hotel owner, which is kept closed, just empty spaces, some other will take it for rent. Immediately he'll also get that money. So he used his Panchayat member, his friend, his relative to sanction a park there. So just by the park, imagine the revenue this guy will be getting. His hotel business increased. Hotel business earlier, if only 10,000 rupees sales was in a day, now 1 lakh rupees sale will be in a day. Children in that area, no other park is there. Construction, so some children will be coming, and near to some other shops are also there. So, and that is also owned by this person, and he'll also get rent from that. So this kind of projects these Panchayat members will do. Auditors should be cautious, and even if they do like this and the park is functioning good, then it is okay. But sometimes the park may not be functioning good. Simply they would have spent 25 lakhs on that. So make sure money spending the return is getting economical. For the park, imagine, think from the Panchayat point of view. Panchayat constructed a park there. Constructing the park was 30 lakh rupees. And the price of entry is 10 rupees. How many years will it take to get the money? So that's a foolish expenditure in terms of finance. But in terms of for the people's well-being, it is a good thing. So as an auditor, check whether huge financial expenditure is involved, schemes are running, that is that parks are running economically and expected to generate targeted outcome. Okay, got it, right? Now, majority topics of this chapter is gone or finished. So here also local self-government, audit procedure is easy, only thing you need to study. Local self-government, what was this? Cooperative society, okay, local self-government, where is it? Also local self-government, just study the audit procedures only, just one question is there. So here how many questions you have to study? 1, 2, 3, 4, 5, 6, 7, 8. 8 questions are done now. Now the next thing will be this one. This is a main area where questions will be coming, that is hospitality sector. And it is very, very easy. See, all these points, amusement park and cinema hall, everything is the same. The SSS, whatever written, same point, ditto copy paste. Just study one, copy paste it on the other also, question comes. And similar points are there in here. Here also, 1 or 2 same points are there. Here also, 3 points are same. You only need 7 points per paper. So ultimately, you only have to study total 10-15 points in this chapter. You can mix and match and write everywhere. So how will you audit a restaurant? You go to a restaurant, how will you audit a restaurant? Happa, what is the time? 10:46 only, no problem. We will finish this chapter now itself. Bank is the only thing which is left. Then, guys, you are attending it on live, you are understanding it, right? That is for your thing is what I am giving in an examples like this. Okay. So how do you audit a restaurant? First is, what is the revenue source of a restaurant? Food sales mostly. So, verify the total revenue, total sales received based on monthly sales report, simple. Then check that the revenue has been realized in cash based on bank statements. Restaurant's money, you will be getting it on cash basis. So, verify that. Then, one thing let me ask you. Check that the revenue has been realized in cash based on bank statement. Check whether arrears written off, if any, has been duly applied. That's leave it. How will you check the revenue realized in cash based on bank statement? Here they have written, I don't know whether they have written it wrong or not, but whatever it is written with the meaning, I'll say. Check that whether revenue has been realized in cash based on the bank statement. Hotel will get money in cash and through UPI bank also they will get. How will you check the revenue with the bank statement? How will you check how much revenue received in cash? This is where the auditor skill should come in. I'll tell you, because when they are filing GST or somewhere, the total sales they will mention as 10 lakh rupees. From the bank statement you can get 7 lakh is going from, so when 10 minus 7 you will get the cash is this much, right? That is a common sense we need to. Simple thing is just a simple thing, but I told you that's it. Vouch all the payment made to suppliers based on the documentary evidences. Hotel need raw material, right? The vegetables, rice, everything. So they'll purchase it, right? When you're paying, vouch all the payment made to the supplier. Here no separate audit procedure is given for payment, receipt, nothing. Entire vouching, audit of hotel is said. Payment, vouching, everything is mentioned directly. Then carefully examine the petty cash book. Simple, vouch the payment on account of rent, electricity, all these things. Then verify the salary based on attendance register, payroll. Carefully examine the valuation of stock. Large writing off of any perishable item should be carefully examined. This one thing I'll say. This is the most funniest audit I've done in in Kerala. I had a resort. It's actually a hotel, like a staying hotel, not a restaurant. And they also have 4 bar in that, like drinking bar is there. So my principal told me, go and audit that. It was not actually audit, it was fraud investigation. I just have to go there and do the fraud investigation. But before I go there itself, they have already caught the fraud. But they never knew how this was happening. The thing was that, I'll keep it short. The bar had a main cook. Bar, I'll tell you the business of this drinking bar. Bar, the main business is not drinks, it is food. Because drinks they will be getting for, like, imagine 100 rupees they will be selling for 200 rupees. 100 rupees only profit. But in food they will be making it for 50 rupee total cost but selling for 300 rupees. Food is the main business in bar. So what happens is that in this bar, this is owned by a rowdy type of a guy. It's a gunda type of a guy. And imagine the guts of that cook to do the fraud in that. He got like bashed beating. Terrible beating he got. I know that. The thing was, this guy, the cook, how he did the fraud, I'll tell you. Every single day, cook is going to purchase, because in that bar, they offer really good chicken, really good meat, all these things, fresh fish, everything is offering. So the cook, what will do is that, he is the one, main cook is the one who is going to purchase it daily, fresh fish, fresh chicken he'll go and fresh vegetables he'll purchase. So when he is going to purchase, the game is that he'll purchase 10 kilo. If he purchase 10 kilo of chicken, 10 kilo of fish, 10 kilo of vegetables, what he'll do is that he'll bring the entire 10 kilo vegetables to the vegetables, rice, everything to the hotel. From the 10 kilo of fish, immediately he'll take 2 kilo and he'll 1 kilo to his home. He'll send it. Other kilo, sometimes he may sell it there itself. That kind of a fraud he was doing. Chicken also like that. So, but the vegetables he'll bring to the hotel itself. And when he goes in the evening, he'll take some vegetables and put it in the cover and go also. So the kind of vegetables people, because fish is something when it is cut, no one will look at the size. But vegetable cutting happens only later. He is the one making everything. So vegetable, if you do the fraud, some people can immediately spot it. But fish and something, even if you see a very big fish, how can you judge how many kilo is that? You cannot judge the kilo. Immediately if it is cut, all the waste is gone, then how can you judge the thing? But vegetable, even if it's cut, the weight you can measure. So he's a brilliant guy. He didn't do fraud in vegetables. He did it in this one. Fish, chicken, everything. And the thing was that when we were auditing that, we found out whatever happened in the kitchen, this much profit is getting for kitchen. But still, this much revenue is getting for kitchen. We separated the sales, like food sales, beverage sales, we separated. So food sales is so good, but the food expenditure is also high. How is that possible? Then we checked what was the expenditure. Their salary, everything was okay. The raw material cost is expenditure. Selling 300 rupee fish fry, and the cost of the fish is coming up to 250, 260. How is that practically possible? Then we checked, we told the owner, there is some issue in your kitchen, you do check it. We don't know what it is. If you want, we'll come and observe. Then he itself found out the case. He itself followed this guy, red-handed, he got caught. So, and he got really good item. Like his face, nose was bleeding, I heard it like that, nose was bleeding. He had this, there's a, like we call a bridge here, right? It got broken. Decent he got enough, because he was doing this for the last many years. Even though it is a good cook, it is like actually fraud. How can an owner that? If I was at his place, I would have also done that. Like, or I would have taken him to court. That is the way. Camera is there. So, so let me tell you one thing. In hotels, how the thing will be is done is that large inventory will be there. Every item is perishable item, right? Vegetables also, it will get damaged in 1 year, 1 month, say 1 week or something. So see whether there is any writing off of this expense, because it may actually, sometimes the chicken may be, for example, a hospital bought 10 kilo of chicken or 10 or 50 kilo of chicken and put it in the freezer. Only 10 kilo got sold in that 1 or 2 weeks. Other thing, obviously it is gone. That is okay. Large perishable item, writing off is okay. But make sure this cook is not taking and selling it, reselling it. So you have to check whether that one was authorized or not. That writing off was authorized by a senior person or not. A senior person came and checked, yeah, the chicken is rotten. Now we'll dispose it. If that, it's okay. As an auditor, check that whether there is any fraud relating to that. Conduct the physical verification of fixed assets and investment. The same point we learned in other area. Fixed asset verification with the fixed asset register. Investment verification with the investment register. Check the adequacy of depreciation and accounting. Same point also we learned in other point area. Collect the list of all liability. Verify them based on contract and arrear. That's done. Then travel and tourism, hotel. Travel and tourism. Travel and tourism. How will you verify travel and tourism? Oh, it got cold. So travel and tourism. Verify. How will you verify a hotel? Like now we talked about restaurant. This is the other hotel, like the lodge or something. Or travel and tourism, any other things also, like booking agencies, all these things. Vouch the collection from customer based on their booking details. Customer booked flight ticket. Verify the, like a flight ticket 3000 is there. Make sure 3000 has come to bank account also. With the counterfoil of receipt, everything. Vouch the revenue out of commission from various companies and tour partners. I am running a resort. I am listed myself in make my trip, the oil, everything. So I may get commission, I may give commission, vouch all that things. That's it. Then vouch the payment made on account of tour bookings, hotel accommodations, everything. Vouch the transaction in cancellation of booking. That is, when a booking cancellation happens, you have to refund the money. Make sure that has been proper. Vouch it. Just Simple things. Check the discount offered, approved by, whether it is approved by competent authority, all this. All the overhead expense, electricity bill, same point we have learned everywhere. Electricity bill points. So when you start studying this chapter, write all the same points in one paper. All these common points, just take the common points and write it in one paper. When you are studying this, what is a common point which you saw somewhere else? Take it and side of that point write where you saw it in cooperative society, like this. For example, this point, not this point, the fixed asset verification register. This is there in everything. So write this point to a piece of paper, and inside of that write, it is there in cooperative society, it is there in bank, everywhere. So similarly, you write every point that is common. And then you can, from that, take whatever is common for 3, 4, 5 area, study that. So that is how you need to easily study this chapter. You can study this chapter in like 2 hours or something, finish off. Nothing. Bank is a tough area, that I can say. Bank, end there is so much conceptual things you need to understand. Here it is not there. Then a simple overhead expense, verify the salary paid, conduct a physical verification of the same point again. Physical verification of fixed asset, investment based, same. List of all liability and verify them, same. The list of all liability and verify them. List of all liability and verify them. 4 points are same here and there. And this is the hotel and guest house. This was travel and tourism, the ticket booking agency, all these guys. Now this is actually hotel and tourism. Vouch the collection from boarders and check the check-in and check. Boarders means people who take room. People who, we used to say, right, board the aircraft means getting into the flight. Board the hotel means checking into the hotel. Same. Vouch the collection from boarders on their check-in and check-out information. Like not a patient, a tourist stayed in your hotel for 10 days. So how you'll know it is 10 days? Verify the check-in date, verify the check-out date. 10 days. So make sure 10 days money has been received in the bank account. Check every customer like that. Then on a sample basis, not everyone, verify the room rent receipt and daily occupancy report. Because in very big hotels, like 50 rooms, 100 rooms are there, like we have Park Central, Radisson, Ramada, Grand Hyatt, all these hotels, every single day there will be a daily occupancy report made by each floor manager, so someone will make it in the hotel. In that, out of 50 rooms, how many room was occupied today? And in that, how many, all the things will be mentioned in that. So you have to check the room rent with the daily occupancy. It is said in the 50 rooms, 25 rooms was occupied. So basically 25 into room rent you should get, right? But in the room rent, you imagine imagine the room rent is 1000 rupees. So obviously 25,000 you need to get. But when you check the room rent you received only is like 23,000. But 25 room has been occupied. Why is that? So where is the room rent for the 2? When you identify this, then you will ask the accountant. That day on that occupancy, this is how it is done. 2,000 rupees is missing. Where is it? Then accountant will say, sir, like one guy was manager, the owner's friend. So he gave the room for free. Okay, 1,000 rupees. Okay, fine. Discount. Then where is the entry for discount? Where is the entry that is written? It should be directed to owner's head. So that 1,000 is missing. Okay, fine. Where is the other 1,000? Other 1,000 is also missing, right? Then when you observe the CCTV camera, internal control, you will identify that some guy came to the hotel and paid money in cash to the accountant. Accountant just gave the room and put the money in the pocket. Simple as that. So room daily occupancy report with if you do this only, you can identify this. Otherwise, how will you check this? Because 365 days are there. On which day, which fraud did, how can you check that? And hotel owner also, he may not be coming to the hotel every single day. Some rooms will be occupied. He cannot open the door and see how many rooms are occupied. No. So for bigger hotels, like 100 rooms, 50 rooms. So as an auditor, you need to do this. I'm saying the purpose behind doing all these things. Then voucher the collection on account of special events such as conference, wedding ceremony. Income from bar, casino, health center should be vouched based on counterfoil and bill and cash book. Then vouch the rent from shop situated in the premises. If you go to a very big resort, there is a resort called CGH Earth in Kerala. There is a Kerala based resort, CGH Earth. And they have property like a vintage properties in everywhere, South India. In Tamil Nadu, in the Chettinad, there is a property called Vishalam. I have stayed there. Very good property. I have stayed in almost majority of the CGH Earth properties. And there Since it is a heritage resort, they have some stores, some shops inside the resort, and where the antique things like the Kathakali, the statues, all these things will be given. And these shops are not owned by CJHR. The shop is owned by CJHR and they give it on rent for some other parties. So verify the rent received from that, all those things, simple. Then verify the salary paid to the permanent staff based on their payroll, salary paid to the casual and contractual staff, all these things. Overhead expenses, same point again. Second coffee, manager. Thanks. Break. Then collect the list of all liabilities and verify them based on the contracts and error of bill. Simple. And now this is very simple. Nothing is there. Study one, get the next. Same, every point is repeated. Same point. Cinema hall. Only this point is not repeated. Some very few points are not repeated. How will you check a cinema hall? How will you check that? What are the incomes of cinema hall? Tell me. Income and expense of cinema hall. Ticket sale is a main income. Next. Beverage. Food and beverage is another income. Next. Expense. Parking. Parking is another major income of cinema. It's like a very big income. Per movie ticket. Do you know what is the income for parking? In Chennai, I only saw that in Kerala, parking is not there for only shopping mall will have parking. But theatres, there is no parking fee they are charging. It's free. So just imagine you are taking to 100 rupee ticket. In that 100 rupee, 33% is for the theatre. So 30 rupee per ticket, only 30 rupees is they are getting for the movie. Then 30 rupees is for the distributor and 30 rupees is for the producer. That is how the 33% share equal. The percentage varies. Normally 30 rupee, 35 rupee per ticket is what the theatre gets. When everyone coming to the theatre will be in a car or a bike. In Chennai, bike parking they are charging 20. Raki theatre in Ambattur where I went. So local, small theatre they are charging 20. In a medium theatre they are charging 30. So every ticket they are getting ticket price of 30 plus parking is the bigger price. Ticket sale only they are getting 30. If a car is coming for parking, then obviously 40, 50 they will charge. So parking is the biggest revenue for parking and beverage, food and beverage. But food and beverage mostly will be conducted by the people will be, the theatres will give that for lease or rent. Outside contractors will be coming and doing it. And there I would not say theatres will be getting that much profit because these politicians will say to the theatre owner, these people who take the contract of this theatre food may be highly influential people. These politicians may call the theatre owner. I will grant you the permission to construct a theatre there, but for the next 10 years, you have to give the contract of food to my party. One party will come. So only very normal theatres will get only less income. But if you are like a very powerful person owning a theatre, then it's not okay. But normal persons I am saying. So the theatre, the biggest revenue is parking. One of the biggest revenue is parking. So how you as an auditor are verifying this? Then there is another revenue which you missed. Advertisement. In midst of the theatre, advertisement will be shown, right? For that theatre is taking money. So these are the basic 4 incomes of theatre. Parking, this one, tickets, food and advertisement. And what are the expenses? Salary, electricity, AC, all these expenses are the maintenance, everything. So how will you verify that? Check whether appropriate control is in force over the tickets of different denominations. 100 rupee ticket, 200 rupee ticket, 50 rupee ticket will be there. See whether appropriate control is there. That is, a person who took 50 rupee ticket should not be allowed to sit in the 200 rupee balcony. So make sure that control is there. Then verify whether unsold tickets that are not sold are kept under lock and the key under the responsibility of an official. A theatre had 1000 seats. This is the case of in the old times. Now everything is book my show automated. So now the normal printing tickets is very less. But still, the game is that the ticket, people who tear the ticket and give it, right? So if there are 1000 seats in a movie hall and only 500 is filled, sometimes the person tearing the ticket or some local person there, manager or something, he will take 10 tickets with his hand and the unsold ticket is that. He'll give it to his wife or his friends or something. So who is losing the money? The owner is losing the money. So as an auditor, make sure these unsold tickets are kept under the proper authority in a room with a proper lock and the key is also with a responsible official. Make sure that. Then Vouch the collection based on daily sales report of tickets and entries in the cash book. Same point is there in here also. Vouch the collect. Here also check. Amusement park also. Appropriate control is in force over the tickets of different denominations. Same point. Vouch the collection on daily sales report of ticket. Same point. Check whether collection from advance booking have been duly adjusted. When you receive collection from advance booking, like on 25th, a movie is releasing. Money is advance booking happens from 21st. So 21st money received for 25th ticket. So when you are making the entry, this both should match. So make sure that matching is done. Because money is received on 21st and ticket is here on 25th. So daily report there will be a clash like that. So make sure it is not there. Advance collection is properly adjusted. Then vouch the collection on account of rental income due to hiring of hall for special events or something. One day theater was given as a rent for a marriage hall or something. May verify the rent is simple. Vouch the collection from sale of drinks, refreshments, everything. Vouch payment on account of advertisement agencies, all this thing. Theater ads, verify the payment. Payment to supplier refreshment should be vouched. Vouch salary paid to the staff. Conduct a physical verification of fixed assets in the same point. Same point is there in the same. Every point is the same. Ditto copy paste. You will get it. So if you study this, just the cinema, you can write amusement park and 2-3 points of this two also you will get. And some extra points keep and study. Only max to max 10-12 points total you have to study for this area. This chapter is also done. Now we can have a break and we will be back by 11:20, and after that we will discuss bank, then we will finish off financial statements. Done. Okay. And guys attending it on live, have a break, come back in by 11:20 sharp. I'm not even going out, I'm sitting here, so 11:20 will open. Now we have bank audit. Bank audit. Bank audit is very easy except these three: bills payable, contingent liability, bills for collection. These three, even if you read, you won't understand anything. That I can guarantee. So other areas, it's like these things. It's how to verify deposit, like see whether interest accrued proper. All these things. It's this area you can just read it. It's very easy. You will understand. So I'll focus on the tough areas more because that needs explanation. Everyone knows what is actually bills receivable, bills payable, how bill is discounted, all the journal entries regarding that also. I'll check. Everyone knows that. Bills receivable, everything. Okay. Then half the job is done for me, because sometimes some students may not know the entry of how actually a bill is receivable work, how actually discounting work, what is inward bill, what is outward bill, all these things are there. I'll explain everything, don't worry. We'll give you the clarity. Even if this is auditing class, accounting will also be taken care of. So different types of banks. What are the different types of banks? Commercial bank, rural bank, different banks are there, simple. Cooperative bank, development bank. This is commercial bank is daily here bank, like SBI, all these banks which we see now. Rural bank, regional rural bank is like for inward villages, everything, they'll construct banks there. That is cooperative bank, cooperative society bank, we know. Development bank, for example, what was that bank? IDBI, industry developments. For that there are banks, will be that. For which give loan for construction of this building infrastructure or some buildings, everything. Then payment bank, the Paytm Payments Bank, Airtel Payment Bank, we know that. Then small other finances, small banks, that's it. Regulatory framework, that means these are the laws that is applicable to a bank. Banking Regulation, Companies Act, all these laws will be applicable. Then form and content of banks' financial statements. Let me ask you, bank, in which format bank need to prepare financial statements? Because in companies we have Schedule 3 format. Similarly, for bank is regulated by this RBI. So they will have a format, and in that format you have to prepare Banking and Regulations Act. As per that, you have to prepare balance sheet and profit and loss account. There is a format for that. We don't have to look at all those things. Then auditor of a bank. This is an MCQ area. If they are asking, they can ask. Auditor of a banking company is to be appointed at the AGM of the shareholders. Banking company, bank which is incorporated as a company, banking company will be appointed at the AGM of a shareholder. Then auditor of a nationalized bank, SBI, all this Indian Overseas Bank, all this bank, appointed by the bank itself through board of directors. Then auditor of SBI, not SBI, other nationalized banks. Auditor, because SBI is government. SBI is appointed by C&AG. C&AG will appoint SBI. While the auditors of RRB, Regional Rural Bank, will be appointed by the bank itself with the approval of central government. Just MCQ purpose, keep in mind, that's it, nothing more than that. Remuneration will be fixed as per 142 of the Companies Act in case of banking company. Nationalized bank is fixed by RBI, simple. Then audit report, the financial statements present true and fair view, simple areas. And these areas also you can keep, simple items. How to audit various items in financial statements of a bank. Bank has financial statements. You are an auditor, you are going to audit bank. They will give you the financial statement. Now, how will you audit each and every item in financial statement? Because I am not discussing this too much, because same item we are discussing it in financial statements chapter. Because their financial statement item is discussing. Here it's bank's financial statements. But just read, you will understand. Only tough thing is that how will you verify advances in bank? How to audit advances in bank? First is ensure that the internal control for giving advances is in place in relation to advances. Scrutinize the subsidiary ledger and all the control accounts. Then ensure the proper documentation of accounts. Scrutinize the overdue account and scheme for recovery of such amount. Advance means the money that bank has given us a loan to people. So this figure will be written as 10,000 or something, not 10,000, 10 lakh, 10 crore or something will be there. How will you check that? First is ensure whether the internal controls relating to that is in place. Because when you wanted to give a loan, you cannot simply give a loan. For bank, if some customer comes to a bank and asks, I need a loan of 10 lakh rupees. There is a process behind it to get the loan. First it will be, you need to give your income proof, you need to give your father's job, mother's job, all these other details, PAN, process, everything will be there. What are all these things? These are actually an internal control, because when a person asks all of these things, what is he checking? He is checking your credit worthiness. Will you be able to repay the money? When he checks your income proof, you are taking a loan of 10 lakhs and you have only 10,000 as salary. How will you repay the loan? EMI itself will be 20,000. So they will be checking all this credit worthiness. So to check all these things, banks will have internal controls, people there before giving advances. And in giving advances also, there will be some internal control, some software to make sure that the proper money is gone only to that person's account. One person asked a loan of 10 lakh, other person asked a loan of 20 lakh. Bank sometimes gave 20 lakh to him and 10 lakh to him. That should not happen, right? To have the proper money flowing, you need internal controls to check that all things. So ensure that all the internal controls are in place. Then scrutinize the subsidiary, ledger and other control accounts. You just scrutinize all the ledger accounts relating to all these things. Then ensure proper documentation of account is there. Then all the accounts have been properly documented. Then scrutinize the overdue account and scheme of recovery of such amount. Overdue account means you gave a loan of 10 lakh rupee, they have not repaid the EMIs. Last 3-4 months they have not repaid the EMI. If they don't repay it for more than 90 days, it becomes an NPA, non-performing asset. So obviously then that is an overdue account. Even if you don't repay for 1 month, it becomes overdue account. So see all the overdue accounts. When you go to bank, 10,000 account they will show to you. But in Excel, you can easily filter overdue accounts. So like 100 accounts which the people have not paid money will come. So scrutinize that account, that is verify that account and see the scheme of recovery of such amount. Some people may not have paid it for the last 2 years. They may not have paid the EMI. So ask the bank, out of 10,000 account, you got 1,000 overdue accounts. You filtered. From that 1,000, you checked people who have not repaid money for the last 1 year, more than 12 months. So some 50 people comes in. So now you will take that 50 people, print it in a piece of paper, that list, go to the manager and ask, your bank has not collected money from these 50 people for the last 1 year. How are you planning to recover money from them? So the manager will say, now we have their home, etc. pledged with us. We are planning to sell it this year. So auditor will write that in the audit report, because auditor is auditing bank for the shareholders, right? Not for the management. So then, cash in hand verification exercise is very simple. All these things are super simple. And money at a call on short notice. That is one. Do you know what is money at call on short notice? For a bank. I'm explaining the terms which you may not know. That is why. Money at call on short notice means if a bank needs some urgent money. There is a movie called Taskara Veeran. It's a Malayalam movie. In that, there is a story. A businessman is there. That is a villain character. What he is doing is that he has a Binami bank account in a bank. His actual name is like Epen, something. That is his real name in that movie. And he operates a Binami account called Samuel John in a bank. And there is not even a person called Samuel John. And this is like an old movie, and the account was opened in 1980s. At that point of time, this kind of verification, everything was not there. So, and he operates everything through Samuel John's account. This Epen operates. Even the bank don't know there is not a person called Samuel John. Bank also don't know. That is it's a movie. Think like in that area. So for all the checks, everything, Epen is signing, because bank don't know the signature difference between Epen and Samuel John. And he has also authorized, Samuel John has authorized this Epen to act on his behalf, saying that both are partners or something. So this Epen operates account through Samuel John. And the Mammootty is the hero in that movie. He will identify all these things, and at the end of the day, he will come as Samuel John. He will do the makeup. He will come as Samuel John to the bank directly and says, I am Samuel John. And he has all the fake passport, everything will be there. So bank will immediately call this Epen, like, your friend Samuel John has come to the bank, and Samuel John holds around 9 crore rupees in the bank, the biggest account holder in that bank. Samuel John says, I need all the money, withdraw it, everything, I'm taking it now. So what happens is that all this money is actually of Epen. You got the story, right? Understand the story. So bank manager calls Epen. Come, your friend has told to withdraw all the money. So he cannot say this is not Samuel John, because then it will be revealed to the bank that there is no person. Then bank will say, bring Samuel John. That is also, so that is a game that happened in that movie. So when sudden situations comes like this, and he is telling, I need 9 crore rupee in cash now. He has brought even like a van to take the money and go. So when sudden fund requirement comes, that is, when I say the story, you'll never forget money and call on short notice. So when sudden fund requirement comes, now suddenly SBI needs 9 crore rupees. Their bank, they don't have that much money in stock. So immediately they'll call SBI other branch or some nearby other banks, some Axis Bank or something, and tell, urgently I need 9 crore rupees now. I'll repay tomorrow itself, because my fund, it will take some time to my fund to come, because he needs cash. Account transfer is not okay, he needs cash. It was movie of 2000. Remember, at that point of time, UPI, digital banking, nothing was around there. Cash was there. So for the sudden fund requirement, if a bank needs sudden fund requirement, he'll borrow it from some other banks. That is what we call money at call. When he calls, he'll get the money. Money at call or short notice, immediately he'll get money. That is what we call money at call and short notice. So as an auditor, how will you verify money at call and short notice? First, examine the system of authorization to get the money. If the bank clerk calls other bank, will he pay money? No. The senior manager should call, then only the other bank will give the money, right? So see the system of authorization for money. That is, who need to call to get that? Who authorizes that? See that. Ensure that a call loan made by the bank are not netted off against a call loan received by it. Some banks, imagine this is SBI and this is some Catholic Syrian bank or something, SBI. And SBI took 5 crore of money at call and short notice on Monday. And in the next day, here is another bank called State Bank of some Indian Overseas Bank. So this bank required some urgent money. Now SBI gave 3 crore to him. From SBI's balance, SBI gave 3 crore to him. So in SBI's book, actually it should be shown as money taken 5 crore, money given 3 crore. It should be separately shown. Don't net it off like this. It should be separately. These are actually 2 items. If for asset and liability, we will put asset minus liability, we will do it right. Don't do like that. This is separately you need to keep it. Don't do like that. That is what is called. Ensure that call loan made by the bank, what we give plus what we received, should not be netted off. Ensure that money market lending for more than 6 days. That is lending. I gave loan for more than 6 days. I gave it, now Monday I gave it, next Monday came. 7 days is happening. Are not classified under this head, but as deposit or advances. If a bank gave this money at call to other bank, within 6 days itself he needed to get it back. This is like an immediate fund requirement. Immediately you pay, next day you will get it back. If it is more than 6 days, if it is only less than 6 days, it is classified as money at call and so that in the balance sheet, that head, in the P&L, in the books, this head, it will be classified. But if it is more than 6 days, then it will become like a normal loan. Put it in the normal loan head itself, under the normal loan head. That's it. Fixed asset, now you understood, right? Money at call and short notice. And fixed assets, borrowings, everything you will making really good. But look at the spelling of borrowing they put. Borrowing. Then bills payable. Bills payable, bills receivable, contingent liability. These 3 things is something you need to understand. Majority of you may know what, because if you are strong with the bills payable, bills receivable concept, how it actually works, you will easily understand this. But some students may not know that. That is why I told it may be a bit complicated. Bills payable. Think of it like a creditor. First, what you need to do is evaluate the existence, effectiveness and continuity of internal control over bills payable. That's a simple point. See the existence of internal control and evaluate the effectiveness, everything. Then the bank should have a reliable private code known only to the responsible officers of its branches. Coding and decoding the coding and decoding of the telegrams should be done only by such officers. What do you mean by private code? What do you mean by telegram in a bank? Telegram means for a bank to communicate with other bank, SBI Delhi to SBI Chennai or SBI Delhi to other any bank. If they want to communicate, imagine SBI Delhi requires, so I have a bank account in SBI Delhi. I go there for some demand draft or something. So, and I want to transfer it to Chennai. So, if SBI manager want to call Chennai manager, sometimes in phone, if we call, they may not pick up, all these things will happen. So, bank has a super fast method of communication. That is called telegram. Bank to bank, tuck communications, there is something called telegram. So, to operate this telegram, there is a code for that, like a password. That is private code. Just think of Telegram as an app, just like the normal Telegram we have. It is like an app for bank-to-bank communication, and to open that there will be a password, and this password should only be known to the bank manager or the senior officers. That's it. That is what is written here. The bank should have a reliable private code, and that code should only be known to the responsible officers of the branch. And what is that for? Coding and decoding of telegram. This telegram should be done only by such officers, because they only know the code. They can only communicate through telegram. That's it. Then the signature on the demand draft should be checked by an officer with the specimen signature book. That is, do you know what is DD, demand draft? Everyone know, right? You have CPT or something, foundation, you have learned that. In case of a demand draft, the person signing it, the sign will be there, right? You have to check whether the sign is original or not. Just cross check it. That's it. Signature of demand draft should be checked by an officer with a specimen signature book. No, auditor is not doing that. The bank person should do that. Auditor should check whether he is doing that or not. Then, because auditor don't know the signature, just on a sample basis, he can cross verify one or two. That's it. Then the telegraphic transfers, the telegram communications, or telegraphic transfer means communication, and we also transfer fund between interbank. Tuck, tuck, tuck. Then, and the demand draft issued by a branch should be immediately confirmed by the other branch. On payment of these instruments, the paying branch should send a debit advice to the originating branch. Advice means a return request to confirm, because I send a demand draft on SBI Chennai. This is SBI Chennai, SBI Chennai. One person came to me and he has 10,000 rupees in his account. He told me, write a demand draft in the name of his friend in Delhi. I'm in Chennai, I'm SBI Chennai. Write a demand draft for him in his friend's name in SBI Delhi. So he gave me everything. I wrote the demand draft, I signed it and gave it to him, and he will give it to the person, and that person will take the money from Delhi only, right? SBI Delhi only. So I am the issuing branch. I issued the demand draft. I am the issuing branch, and that person, SBI Delhi, pay the money to that person, right? When he produces demand draft, SBI Delhi pays the money. So SBI Delhi is the paying branch. Just keep this much in mind. Understood, right? Do I need to draw picture? What the clarity, right? Okay. So that's it. So the telegraphic transfer, let's forget the telegraphic transfer. The demand draft issued by a branch should be immediately confirmed by advisors to the branch concerned. I issued a demand draft for SBI Chennai or SBI Delhi. That SBI Delhi should immediately confirm it, first thing. Then, on payment of these instruments, that SBI Delhi is paying the instrument, paying the money. On payment of that, the paying branch, SBI Delhi, should send a debit advice to the originating branch. He should send a return request to my branch also. Like, I've paid the money, everything is okay, make the adjustments, done. Just keep that in mind, simple. See, items are simple if you understand the meaning, but their language is a bit complex, so you may not understand. The advice, what is an advice? Advice means normal advice, you say, but in banks it's a return request to confirm something. Return request to request something. If I need a glass of water, I'll write it in a piece of paper and give it to a car. It's just like that. Then, if the paying branch does not receive proper confirmation of telegraphic transfer or demand draft from the issuing branch, it should take immediate steps to ascertain the reason. Like, paying branch need to get my confirmation before they pay. If they don't receive the confirmation, take immediate action. That's it. So auditor need to check all these things. That is what is mentioned here. 4 points, you got it right. Bills payable. Now contingent liability is very easy. We'll study bills receivable first. Well, bills collection for bills for collection. Bills receivable, bills for collection means I did a sale. Simple example I'm saying you. I did a sale and the debtor could not pay me the money. So he gave me a bill, normally a bill. That is what I call bill receivable. and I don't have time to collect all this money from where. So I gave it to my bank, and bank will connect money on behalf of me. Bank will connect money. He need to pay money to the bank. Like, just think of it like a discounted the bill to the bank itself. You know, discounting of bill, right? Same. The bill was of, I did the sale of 1,000 rupees. He gave me the bill of 1,000 rupees. I gave the bill to the bank and got 900 rupees. 10 rupees is 100 rupees is bank's commission. And now bank will connect 1,000 rupees from him. That is how the, do I need to draw it? Don't know. You know what bills receivable. So that is how it works. And here don't think of that bank's commission. I have given my bill to the bank and bank will connect my money on behalf. Simple as that. So in that case, auditor should examine whether bills drawn on other branches of the bank are not included in the bills for collection. Bills, if you have drawn any bills for other branches, not on these branches, no, it is not included in this bank because it's that branch's collection, right? So make sure that. Then, do you know what is inward bill and outward bill? Inward bill is also there, outward bill is also. Inward bill means a bill received by your bank for your collection, for collection on your behalf. This is my bank, I gave my bill and this bank itself will collect on my behalf. Outward bill means, now my bill is with this bank, right? This bank will give it to some other bank for collection. That is outward bill. Inward bills are generally available with the bank on the closing day and the auditor may inspect them at that time. Inward bills are available at the closing day, inspect at that time. But in case of outward bill, it may not be available at that point of time. So they are not likely to be in hand at that date of balance sheet. Outward bills, we have sent the bill, so it will not be in our hand. So in that case, verify them on reference to the register maintained for outward bill collection. Do I need to explain inward bill more? Inward bill, anyways, it is within the bank. The bill is, document is there in the bank. So if auditor want to verify that, take that, open that document and verify. But outward bill means I have sent this bill to a different bank. The physical thing is not in this bank. So if I want to verify that, I cannot go to that bank and verify it. They'll kick me out. So I have to verify it through other mechanism, through register everything. You don't even need to know what is bills receivable, everything. Just understand this and go. That's inward bill, outward bill, verification, everything. Auditor should examine the collection made subsequent after the date of balance sheet to obtain further evidence about the existence and completeness of bills for collection. Auditor need to examine collection that is received from bills receivable after the balance sheet date. If you received any bills receivable after the balance sheet date to obtain further evidence about the existence and completeness of bills for collection. That means sometimes if company want to, I'm giving a hypothetical scenario, not a real scenario. If company want to increase their assets to get some loan or something, they may simply put some debtors, simply put some bills receivables, everything. If some bills receivable is a fake thing, auditor cannot check, and he can cross check with sales, but if the sale is also fake, then what can we do? Because if company don't want to increase asset, company actually want to increase fake sales. When the sales increases, turnover increases, so company will get really good valuation. They can take better funding from investors. So companies will do that. So when you are passing a sale entry, you cannot pass with cash because cash you have to show it in the bank account. So fake sale entry, fake debtor will be there. That is fake bills receivable also will be there. So a lot of fake bills receivable will be there in companies doing a fraud. Cash account debtor to sales, you cannot put that entry. Debtor account debtor to sales or bills receivable account debtor to sales only you can put. So in that case, sale will be fake, bill receivable will be fake. So how will you identify the fake bill receivable? It's tough. So one suggestion is that this one. If a bill receivable is original, the date will be mentioned, like in the next week that day. In the next week that day, I will be collecting the bills, something like that. The expiry of bills, the date will be mentioned. So imagine a bill receivable that this is the 31st of March. Suddenly, nearly in the March 15th onwards, lot of bills receivable and sales entries happening here. To see whether this is original or not, he can see whether the money has come from the bills receivable during this period after the year end. If the bills receivable is original, in April or May, the money will be anyways received, right? So just check the subsequent transactions. Next is because anyways auditing is happening on August only. August or not June, July, that period we are auditing the last year's statement. So make sure just cross check this April, May also to see whether money has received from the bills receivable. If yes, then that is an original sale. If still no money has been received, that may be a fake sale. That is what is written here. When you are verifying bills receivable, examine the collection, receipt of money made subsequent to the date of balance sheet. Balance sheet and to obtain further evidence about existence and completeness of bills. In regard to the bills for collection, auditor should examine the procedure for crediting the party on whose behalf bill has been collected. The journal entry. Just see how the process is credited. This will be the normal entry, right? In banks, books of accounts, cash account data to customers bills receivable. When bills is received, when money receives, my bill is with the bank. And in the bank's book, that bills receivable will be on the debit balance. Like the customer, my name will be on the debit balance. Sudarshan's bills receivable. It will be on debit balance, it will be there. When money comes in, what will the bank enter? Cash account debit to credit to my name, right? See that entry, that's it. And the bank is also done. This chapter is done. It's very easy chapter. It was very easy, right? We missed it. Eh? We are online, attending online. Ah, super. Oh, so dedicated. What happened, Kalele? Doctor. Temple. Oh, okay. Like temple like positivity will be there. We go to temple, church, whatever you are believing in. Then now we'll go to financial statement. That's I forgot that thing. Sorry. Anyways, you can also do that. That chart I made, right? With question sheet. Let's make that. The one only bank and this is left. Like hospitality is left. You can write that. Done. In bank also, the primary focus should be given to the audit procedures. Audit procedure of advances, audit procedure of fixed assets, audit procedure of bills receivable, all these things. What is it? 686 or no? Audit procedure for this is a area. This is the toughest things in 684. Yeah. This is very easy area chapter. Same like that. It's very boring to teach this chapter because everything is the same. I'll be like just a book reader on this. Even if I read this itself, you will understand what it is. It's like that. Maybe we can wind the class like earlier also today. It is very easy chapter. And I'll touch upon the important areas. Very important areas are there where you will lose marks. And only consider this chapter at the last when you are studying, because this is a very big chapter. 1 or 2 questions you may expect, but still make this at the last, because else you will lose 2 days on this. And I would suggest it's very tough. If the paper was for 100 marks or something, there was a benefit in studying this chapter. Since it's for like only 50 marks, you have options, right, to skip one question. Then what is there to ask? Because I'll say, I'm giving a practical point of view. If you had 3 months or something for your examination, I would definitely suggest you have to time. But only 1 month is there, you have other 6 subjects or something. How many subjects are 8? 8 is there still. And CA has got down to 6. CMA is still on 8. And you don't have a leave in between exams, right? Appa. That makes your exam tough. Even if the questions coming are like direct, but still without a leave, covering this much portion is very tough. I would say very tough. Because CA inter auditing and this is exactly the same. But 3-4 extra chapter. For bank audit, we studied only 3 areas, right? There bank audit is a 70-80 page chapter. What we studied the bank audit is 80. You know that we studied. So, but content is double. But thing is, there we have a 1 day gap in between. And you have to study this plus accounts in that night only. So how do you normally study then? Like exam happens at noon. You'll be back home by around 6:30 or something. Then you'll study till the next day noon only, right? For the one exam, one subject. Oh, it's horrible. Oh, you. And 8 papers are also there. So 8 days exam is over. But, oof. And group wise, how many marks you need? Like 200, right? Same. 200 and 50 for 40 for each paper. Okay. That's tough. Audit of various items of financial statements. That means this one is in financial statements. Think of a balance sheet, think of a P&L. Many items, I'll draw it and show it, then you will understand easily. Imagine this is a balance sheet. Just the picture should be there in your mind. That is why I am putting it in paper. This is a P&L balance sheet. Here you have share capital is here. Share capital, liability, asset like a plant and machinery, land and building, 10 lakh, 20 lakh, 20 lakh, 10 lakh. The figure will be there, right? And here also figures like sales, all the figures will be there. And this, how do you audit each and every items in the financial statement? How do you audit whatever is there in the financial statement? How do you audit those items? That is this chapter, audit of items of financial statements. And this is what we call an assertion. You know what is assertion? There is a term called assertion. Management prepare the financial statements and give it to us. So ultimately management is saying something to the public. That is, company has a plan. Imagine the plant and machinery. This is management financial statements. This means plant and machinery, company has a plant and machinery of 10 lakh rupees. This is what you understand from seeing that balance sheet, right? So what do you understand from seeing land and building? Company has a land and building. That is, there is a land and building that exists in the name of the company. That is first point. Then the price of that land and building is 20 lakh. The value of land and building is 20 lakh. You understood two things from this. This is what we call assertion. What is management trying to say to us through financial statements? So in this case, we can say land and building exist. That is what we call existence assertion. Existence assertion. Then the price of land and value of land and building is 20 lakh. That is what we call valuation assertion. Similarly, many things assertions are there. I am just giving you this idea. Assertion means what management is trying to say to us through financial statement. What do you understand from seeing that one figure? That is what we call assertion. Simple as that. Whatever you understand, that is assertion. Then what here vouching and verification. I told you right today morning. Vouching means examining the accuracy, authority, authenticity of transactions that appear in the books of accounts with the help of vouchers of these transactions. Vouching, sale happened, sale invoice like sale register, the books of accounts plus invoice cross check. That is vouching. Verification means process of substantiating of assets and liabilities recorded in the books by means of physical inspection, examining the documents, all these things. Physically going and seeing all these things and verifying whether the amount is correct. Plant and machinery 10 lakh. Going and verifying whether there exists a plant and machinery value 10 lakh. That is verification. This is what we call assertions. In case of P&L, these are the assertions in P&L. Every item you take in P&L, these assertions will be there. I am using the term so that you get familiar with it. We will break it down very simple. Occurrence. You tell me any item in P&L. Just tell me any item in P&L. A revenue for operation. Revenue for operation. Sales. Sales occurrence. Sales is equal to 10 lakh. What does that mean? In that year, a sale occurred for 10 lakh rupees. Sale occurred sale only will be written there. Occurrence. That is what we call occurrence. When you see sale 10 lakh, first thing you will understand is that a sale has occurred. That is what we call occurrence. Then completeness. Completeness means in the financial statements when you see sale 10 lakhs. What does that mean? All the sales of that year. In a financial statement, all the sales of that year should be included, right? So 10 lakh means 10 lakh is a total sale of all the year, that one whole year. All the sales that happened in that 1 year is total is 10 lakh. That is what we call completeness. All the sales, all the transactions in 1 year that should be recorded have been recorded. Completeness. That is what we call completeness. Then cut off. Cut off means in the financial statements top you will see the date. 1st April 2023 to 31st March 2024. That is what we call cut off. Sale 10 lakh. What does that mean? the 10 lakh is the sale of only that 1 year. That is what we call cutoff assertion. Then measurement, sale value is 10 lakh. That means value is correct. We are understanding this. These are basically what we call assertion. Last one is presentation and disclosure. It is written in the correct format. So occurrence means recorded purchases represent goods. Here purchase is taken as an example rather than sales. Recorded purchases represent goods that actually received during the year. Here purchase will take sales, opposite. Completeness, all the purchases made during the year have been recorded. That is completeness. Cutoff means purchase shall include all goods and services in transit and belong to the relevant period. Cutoff, relevant period. Only that period's purchase is 10 lakhs. That's it. Measurement, all purchases have been measured appropriately basing on the supporting evidence. The amount is 10 lakh is correct. That is measurement. Presentation and disclosure, required disclosures as per regulations have been appropriately done. So when you see in a P&L sale of 10 lakh rupees, you understand all these things: occurrence, completeness, measurement, and what was the other things I forgot? Occurrence, completeness, measurement, cutoff, and presentation and disclosure. You will understand all these things. Don't overthink about that. Slowly you will understand that. Don't worry. Similarly, in balance sheet, you need more explanation on this. P&L. Got it mentally. What is assertion? Clarity problem. Then similarly in P&L also existence. Plant and machinery 10 lakh means there exists a plant and machinery of 10 lakh. Rights and obligations. Only the plant that I own will be put in my balance sheet, right? If I'm not the owner of that plant and machinery, will I put it in my balance sheet? No, right? So in my balance sheet, there is a plant and machinery of 10 lakh means I have the right and obligation or right of that plant and machinery. Similarly, in my balance sheet, I have a liability of 10 lakh, loan of 10 lakh. That means I have the obligation of 10 lakh. That is what we call rights and obligations. You understand? Then cut off all the plant and machinery is 10 lakh. That means the closing value based on that accounting period is 10 lakh. Completeness, all the plant and machinery, total of all my plant and machinery is 10 lakh. All the plant and machinery that should have been recorded have been recorded. Company may have 10 plant and machinery. So the total is 10 lakh. Valuation, the value of 10 lakh is correct or not. Value figure, if it is coming as per the depreciation, everything, the 10 lakh is correct. Presentation as per the format. Presentation disclosure you ignore. Normally they will not ask. Other things it's important. Now it is the audit of items of financial statements. Audit of income statement. That is first, how will you audit a sale? For the next 10 minutes, 30 minutes, I have to be a book reader. It's like very easy stuff. How will you audit a sale? See, occurrence. How will you see whether sale 10 lakh? So the question will be like, what is the audit procedure for like occurrence of sales? They'll ask this. So you have to write this much. That is how it is. And this cut off everything, they will not maybe one sentence. How can you write one sentence? So focus on this chapter, focus on areas where there are 6-7 points. So maybe they will be asking directly that. Just study that, and I would suggest that. And if more time is there, study everything. So here 5 points are there. So I have picked questions like that only. Simple things where there is a need to explain. Occurrence. How will you check? This means how will you check whether sale has occurred or not? Sale of 10 lakh is written there. So how will you make sure the 10 lakh actual sale is 10 lakh? Whether sometimes only 9 lakh sales may have occurred. They have simply put 10 lakh. So how will you make sure that? How is an auditor? First is ensure that all revenue items recognized are genuine and no sale transaction has been recorded twice. Make sure that. Simple. Only every transaction only once. Make sure. Then test check a few invoices with the accounting entries. Cross check in bill with accounting entry. Bill with the books of accounts. Cross check. Then verify the return transactions with the sale invoice, chellan credit note, stock record. Return transaction means sales return. Verify the sales return. Simple. Then obtain confirmation from few customers to check whether the transactions are genuine. Debtors account debtor, Mr. Ram, he is a debtor. Ram account debtor to sales entry is put. Just send a confirmation request to Ram and see whether the sale is original or not. Because then he will say, if the sale is fake, he will not say, who the hell are you? I have not done any purchase or something. Then ensure that no fake sale transaction have been recorded. Same point here also they are recorded. Then for services, see that revenue has been recognized based on the policy undertaken. For services, I will say, for product, when you are selling this product, immediately you will get the money, or after like a debtor is there, 1 month or something, you will get the money. But when you are selling a service, imagine a photographer for marriage. He is doing a service, right? For example, my marriage is happening in next month. Just think like that. Think like that, hypothetical. Okay? Not me, I'll take Hari. His marriage is happening next month. I am a bachelor, like let people are listening. You people are not seeing you, right? I'll take Hari. His marriage is happening next month. So, not next month, like 3 months after. Just keep it like, will happen or not, we'll see. But 3 months after his marriage is happening. So, what is that? So, even if his marriage is happening after 3 months, photographer and everything he'll haul, everything he'll need to book now itself, because you'll not get the photographer at that date. So he went and paid, the 1 lakh is the photographer's remuneration, photo and video remuneration. So he paid 30,000 as advances. So the condition is that sometimes if for the photographer, you told the photographer, sometimes my marriage will get cancelled. I don't know, some issue is happening, but sometimes my marriage will get cancelled because of my issue something. So if my marriage gets cancelled, you have to give me the refund. I'll say to you that in two months I'll say. 3rd month marriage is happening, at least in 2 months I'll say whether it is happening or not. But now you take the advance, 30,000. And if my marriage is not happening, please give me the refund, 25,000 or 30,000 back. In that case, there is an accounting principle called revenue recognition. We'll learn it in final, CA or CMA, wherever we learn. As per that, this photographer cannot recognize that revenue, because that is a refundable revenue. Revenue means the income. He is recognizing. Imagine when the photographer receives 30,000, he will recognize cash 30,000. He cannot recognize it as sales, because 30,000 sale is not yet done. If tomorrow he comes and asks for the refund, he will have to pay the money, right? So it is not sales. He'll record it normally, record it like a liability or something, he'll record it. Then what happens is that for all those kinds of things, but after 2 months, you told 3 months after marriage is happening, but you told after 2 months I'll say whether the sale will, the marriage will happen, confirm. So after 2 months you told him, okay, my marriage is getting confirmed. So now he can record it as sale, because confirm 30,000, 1 lakh sales, 30,000 advance is got. So recorded as advance, not as sale, advance he can record. So for services, he must see that revenue has been recognized based on the policy undertaken. There may be different, because here the policy is after 2 months only I'll confirm. So you cannot recognize the advance now. So based on different policies, different contract may have different policies, and you also need to consider Ind AS 115, revenue recognition policy, all these policy before you recognize revenue. For services, make sure auditor need to check whether they are doing it or not. First thing. So then cut off, see whether all the transactions in that 1 year has only been entered. Then completeness, ensure that all the sales of that 1 year has been recorded. Same, like one sentence, all the sales during that year has been included in revenue, simple. Then measurement, see that revenue that are accurately measured. All the amount of revenue is perfect, amount is correct, excluding the GST amount or including the GST amount is perfect, make sure that. Then trade discount allowed to the customer should be checked. If you gave any discount to the customer, that should not be coming under the sale price, right? Sale price is 10,000, you gave a 1,000 rupee discount, so sale is 9,000 only. So make sure the discount, everything is deducted properly, because trade discount you will not show it as a separate item. Trade discount is shown as a deduction normally. Don't overthink that much. This is not accounts, I'm just saying it. So the sale tax, GST, insurance charges, etc. collected through sales invoice must also be checked, because when you do a sale, you will collect the GST, right? You are the one collecting the GST also. So make sure it is separately handled. Only the sales figure is put in the measurement, because if you did a sale for 1,000 rupees plus 18% GST, 180 rupees you got, 1180 money you got. But in this actual sale is only 1,000. This should only come in the P&L. Make sure this 180 is not there in the P&L. That's it. Then presentation and disclosure ignore. Then other income you just read it, similar to sales. how to record, you'll easily get it. Then purchases. Purchases, how will you check purchases? Oh, most probably we'll finish off this chapter by noon itself. This is like a book reading chapter. And when you are studying also, if some topics like I left, many 3-4 topics I have left like this, which you can easily read. Trade receivable, cash in hand verification, what is there? Go and check the cash, cross verify it with the bills. Whatever we have learned till now is there. So if you are learning anything, if you don't get the meaning of that, or if you need any help in, for one sentence also, if you don't know what is the meaning of that sentence, take a photo and send it to me. I'll give you the meaning. Something which you don't understand. Then before that, try it on ChatGPT first or Google first, because that is how you will learn. Always, if you don't understand the meaning of anything, put it on to GPT and ask. Explain it to a layman. What is the meaning of that? Give an example. They'll explain the meaning. Okay, then how do you verify purchase? Exact opposite of sales. There it was sales invoice, here it is purchase invoice. That's it. Ensure that only genuine purchase have been recorded. There genuine sales have been recorded. And see that no purchase has been recorded. That is not there, Bhagya. Then examine the purchase order, goods received, notes, everything. There it was sales invoice, all these things. Photocopy of purchase invoice should not be allowed. When you are purchasing something and you are putting that bill there, original bill should be kept. No photocopy should be kept. Make sure. Auditor has to check that. See whether all the purchases are approved by the relevant authority. When you need to purchase, the senior manager need to approve that. Cut off only purchase during the year has been entered. Completeness also apply the cut off procedure to ensure that all purchases during the year has been entered. Same things. There is no point in reading this. Then measurement, purchase transaction values have been correctly calculated. Measurement means the amount, purchase amount. See that it is calculated, simple. This is one thing. In measurement, information relating to the input tax credit shall be verified. When you purchase something, you pay the GST and you can take it as an ITC, right? So that amount should be properly verified because it will be in the purchase bill. That amount of GST will be in the purchase bill. So cross verify that. Then employee benefit expenses, the salary, ESIPF, all what we gave. Not ESIPF, whatever we give it for the employees. That is a statutory dues. Employee benefit expense. Occurrence. Auditor should ensure that all expenses included in the employee benefit expenses are genuine. And the gain is that this happens in the, because one of my relative, he works in the construction sector. Construction sector, you would have seen that, not that movie. Which was that movie in which, Vijay's movie, where one guy die from the construction and one kid comes and take chocolate. Teri. Similar to that, the construction is there, right? In that movie, I think it was in that movie, there is a sequence where dummy employees are there. Construction is there because in construction area, payment is not done through GPay. They will give construction workers, one bigger flat is happening. There are maybe 1,000 construction workers for a very 10-20 floor flat. 1,000 construction workers may be there. Here and there, very apartment, like a Casa Grande building, right? How many construction workers will be there? Mostly they will be paid through cash. So there, the black money rolling, all this thing is happening there. So what the Casa Grande owner or the person who is doing the construction, he may not know how many employees is there. He may have allotted the work to different supervisors. And one supervisor will say, I have 100 employees under me. So per employee 1,000 rupees per day. So give me 1 lakh rupee for giving it to the employee. And what he will do is, he will tell the employees. He'll tell the employees, or he may not tell the employees also. He may hire only 80 employees and make the 80 employees do the work of 100 employees. So 20 employees, 1,000 rupees cash money. He can take it and put it in his pocket and go. Nobody is going to know that. He'll do some, because all the employees are mostly coming from North India. He will put some name, 80 employees, original name will be there. In the mid of that somewhere, he'll put Kushal and then take the Bihari kind of names, he'll put it, and 1,000 gone. He'll take the money. This happens. So make sure all the expenses included are genuine, original expenses only. Obtain a complete list of employees with the data of new hire, their appointment date, remuneration, terms of condition, everything. Simple. Then For a sample of newly appointed employees, he may conduct a complete examination of their appointment and remuneration paid in terms. Because now we'll talk about normal companies. They also will put this fake employee list to increase the expenses. So for all the new employees, last year employee list we can check. This year employees also will check. Extra new employees who are there, that is the new names coming in. Right? Last year we have checked whether everyone is genuine or not, and we have concluded. So only the genuine names are there. So this year the same name will be there, plus some new names will be there. You just pick those new names out and check whether they are there, and check their remuneration also, whether it's original or fake or something. Collect the list of employees resigned or terminated during the year and see that their payment have been appropriately decided and settled. All the employees, when they retire, they will be given gratuity, incentive, everything, whether it is done properly or not. Here we are checking the occurrence, whether the transaction, employee benefit expense 10 lakh shown in the P&L, whether the transactions have actually occurred or not, whether that employee is genuine. Thereby only we can see whether transaction is original or not. Obtain the payroll register and conduct an examination, you have lot of spelling mistake. Conduct an examination of reasonability of remuneration and investigate irregularity. That means reasonability of remuneration. What is that? Reasonability of remuneration. What is that? You know? 1 lakh. Simple. That's it. Reasonability. For payment, there should be reasonability in that. Check that. Then he should also see that all the adjustments and such as outstanding salary, PF contribution, everything has been appropriately recorded. All the things have been recorded. And cut off for completeness, same. Everything related to that year only recorded. Completeness, all the transactions of that year has been recorded. Everything. Measurement, see that the total amount of remuneration correctly determined. Check whether the statutory deductions like the PF, ESI, when you get salary, PF, ESI, everything they will cut. Make sure they are accurate, and post-employment benefits have also been determined. Post-employment benefit means once you quit your job, the VRS, gratuity, whatever you get. Then depreciation and amortization is very simple. You can, nothing to read. Yeah, then I still read. Obtain the fixed asset register, identify the terms of depreciation, identify the items of assets acquired, sold and discarded during the year. This will help them identify items for having depreciation, which means you are now going to check depreciation, whether the depreciation amount is correct or not, because depreciation is an amount that comes to P&L and that actually affects the profit, and profit affects the tax also. So depreciation amount should be correct, because these companies, to reduce the profit, they'll play it on depreciation, because it's very hard to, because 1,000, 200, 2,000 assets will be there. It's very hard to check whether depreciation is correct or not. So they'll play the fraud there in depreciation. And how they'll play, I'll tell you. For an AC, normally the useful life is 10 years, right? And the company may have purchased, imagine a very big company, they may have purchased 1,000 ACs. They'll have 1,000 ACs as their asset. So the normal useful life is 10 years. So if you go with straight line method, you will get only 10% depreciation every year. They'll say the useful life is only 3 years. So that huge amount of depreciation, because useful life will be divided by 3, that huge depreciation they will be getting. So huge reduction in profit will be there. So you have to check whether that everything is correct. And how will you check that? Obtain the list of assets first. All the assets that has been opening assets, new additions this year, deletions this year, closing assets. See whether the useful life everything is correct or not. That's it. Useful life for depreciation, reasonability, everything. Then select a sample of assets on materiality consideration and verify the rate and amount of depreciation. 10,000 assets is 1,000 assets is there. Pick 100 assets or 50 assets on materiality. Materiality, I told you, items that are material. For example, THARUN'S binary, this bench, everything will be only like 1,000 rupees hardly, 1,000 or 2,000 rupees. But AC is a 20,000, 30,000 rupee item. So that is a material item, important item. Take that as a sample and verify. Smaller items, leave it. And completeness also, you'll just read it. It's easy, you'll get it. It's nothing to learn. You don't want me to read everything, or you'll read yourself? You'll read it, right? Or anyone wants explanation, just tell me. If I want, I'll like read. Else you can read it also. Para, tell me. What do you want me to do? I am happy to do anything. Anyways, read or not read, just tell me. Everything is a readable item. There is nothing to, nothing bigger. I'll just glance faster. Then if any tough topic is there, tell me. I'll ensure that the depreciation amortization properly charged. What is the need to read that? Amount of depreciation have been appropriately accounted in the primary books. Books of accounts it properly entered. Ensure that depreciation on revalued amount has been properly accounted. Revalued amount. Here it was normal depreciation. Here depreciation on the revalued amount. An asset's value in the opening was 10 lakh rupees. But in the 6 months, it got revalued to 13 lakh. Something land was there. Land got revaluation because some shopping complex came near Lulu or hypermarket. I had a land in Chennai. The land's value was 10 lakh. Suddenly, Stalin established one shopping mall, like a VR mall or something near to my home. Immediately, my land value will shot up 2 times. So, depreciation on that revalued amount also. 10 lakh land became 15 lakh. 5 lakh also depreciation should come. Check that. Ensure that the any retrospective change in the method of depreciation due effect has been given in the income statement. A retrospective change means till last 3 years we were following straight line method, but now we plan to change it to written WDV method, and we are retrospectively changing it. For the last 3 years also we are planning to change it. So last 3 years financial statements have been audited, so that amount difference will come, right? SLM versus WDV, that we will adjust in this year. So see whether that is properly done. Measurement, you just simply read it, nothing, it's very easy. Then presentation and disclosure. Finance cost also, it's finance cost, I would say I'll read. Finance cost, something is important, I guess. Finance cost means the interest cost. Company took a loan, company have to pay interest. That interest cost is what we call finance cost. See whether interest has been provided on all eligible debt instruments and loans. Company took 3 loans is there. So make sure interest has been provided properly for all the 3 loans. What is there to read? Then verify the amount of interest payment from interest payment form. Interest payment from it is mistake. Verify the amount of interest payment from bank statement and check the same with the accounting entries in the books. Bank there will be an interest amount which we are paying, and in our books also one amount will be there. Verify that, simple. Interest was paid only in respect of loans outstanding either for a part of the year or for the entire year. If loan was outstanding only for half year, interest is only for half year. Make sure. If it is for full year, make sure interest is also given for full year. Cut off nothing, completeness nothing. Completeness, interest due but not paid has also been considered as accrued interest, and the same is appropriately accounted. Interest due but not paid. 2 types of interest are there. Either interest you will pay, sometimes you will not pay. Both interest should be included. That's it. Completeness. Measurement, nothing is there. Other expenses, not an important area. In this, the most important items in the P&L segment will be balance sheet, sales, purchase, finance cost, employee benefit expense. 4 items. Most important. Then now we have balance sheet. When it comes to balance sheet, PPE is the most important. PPE, inventory, borrowings is there. Trade receivable also it's important. Trade receivable, trade payable also. Bills receivable, bills payable also. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 items are there in the balance sheet. And in that, 3, 4 items are self-read items. Other things I need to, balance sheet item. PP. Property, plant and equipment. This is an important area, so I will focus here a bit more. First is how you will verify the existence. Assertions in P&L was occurrence, measurement, all this. In balance sheet it changed, existence. Because how will you measure occurrence for a land? Whether land has occurred in this year. That cannot be done, right? Whether land has existed at this year. Similarly in sales, whether sales existed at this year. It's better sales occurred at this year. So here, so existence, how will you verify the existence? Land and building 10 lakh. How will you check it? Physically verify it first. Go and see whether land is actually there or not. Physical verification of the assets and confirm whether they exist. And see the possession is also with the client itself. Client owns the property. Then tally the physical verification report. When you physical verification report with the asset register value of in the both. 10 land is there. So as for physical verification report, 10 land value will be there in that. Check it with the asset register. Something called asset register will be there in the company. Check whether these 10 items are there in this, whether the value is also same. Cross check both. Tally the physical verification report with asset register. Ensure that the PP additions up to the date of verification have been updated in the register. This is happening. This is the date of verification. All the PP additions, new PP bought this year, till the date of verification should be included in the asset register and verification report also. Make sure it is there. Demand the explanation for any discrepancy. You found out that you went in the fixed asset register, it is written 10 land, 10 building or 10 land, 10 properties company have, and you go to physically verify that. Okay, 9 properties you verified, the land was vacant, the board was also there. It belongs to ABC Limited and for future construction. But when you went to the 11th land, there you see a house construction happening, like someone putting in the sand, everything, just unloading basic were happening. So now we have a doubt, what the hell is that? Whether company has sold the land or what is happening. Now we will ask the company. Now we identified a discrepancy. In the books it is written that this land we own, but now it is, we have a doubt. So go and ask the company, what the hell is that? So he will say, oh, we have not even seen that land has been vacant for the last 10 years. So sometimes somebody would have forcefully taken that. They will say something. Then we will cross check it again and again. What was the issue? Identify that. That is how it works. Specifically ensure that assets that are not in the working condition have been accounted as deletion. Take the example of Samsung. Samsung is now producing touch phones also. I mean the touch phones only. But 10 years before they were producing the keypad phones also, right? So to produce that keypad phone, a machinery will be there. And that, imagine in 2010, I think in 2010 time was the touch phone that came into existence. In 2008, Samsung bought a new machinery for making the keypad phone. And that life is 20 years. But in 2009, it became obsolete because everyone wanted a touch phone. That machinery is of no use. Make sure nobody is using that also. So make sure it is recorded as a deletion or written off. It's gone. Or if you are selling it, sell it and record that value also deletion. Rights and obligation, this can be a question because 5 points, here also 5 points. They can directly ask how do you verify the existence and rights and obligation of PP? Done. Direct question is that. Rights and obligation, verify the PP additions approved by the responsible official and capital expenditure budget also, and see that. Means new PP that you bought this year, make sure that has been properly approved by the authority, and that capital expenditure you spend to buy that is that expenditure is approved from the budget of the board, because every year board of directors will meet and think this year we have a budget of only 1 crore for all the capital expenditure for machinery, everything. So money is taken only from that budget only. 1 crore is a budget and you bought 1.2 crore. That should not be allowed. As an auditor, check that amount, whatever amount you purchase should be below budget. Then verify whether appropriate internal processes like inviting, competitive, tender, quotation, etc. was done before finalizing vendor. Means if company want to purchase a big machine, the process is that machine may have different sellers will be there for that machine. Company cannot go to company. Normally, company will not go to one person and buy the thing and will not come. No, company will send, because money of the company is a shareholder's money. Management is managing the money. So this management normally should send email to all the 10 companies that we need this product. Give me your quote. What is your best price? Once we get the best 10 prices, we will compare and we will take the lowest price. That is how it works, right? So normally, so this is an internal process within the company. If you want to buy something, send a quotation to everyone, ask their quotation, all these things. But normally what happens in a company is that the management may have a friend who is selling the machine or some other person. So even though the machine is cheaper in a different company, still he will buy from his friend. From other company it was only 10 lakh. but his friend it is 12 lakh, but still he will buy 12 lakh, and 1 lakh they'll share as commission. This happens. So auditor has to check if there is any new PP addition this year. Make sure proper quotation was taken from every people and the lowest quotation was accepted. No fraud was done in between. Make sure that. Auditor shall check the PP purchase invoices are in the name of the client. Whatever machinery you purchase, see whether it is in the name of you. For land and building, verify the title deed of the property, whether it is in your name or not. Company owns a land, see whether the title deed is in the name of land, company, name of company. In relation to deletion, verify the management's rationale for deletion. That is management's reason for deletion. Why management deleted that asset. Verify whether such deletions are appropriately authorized. I think I told you this example. Imagine there is a company, 2 AC is there. I told it in like a recorded lecture, a different lecture. I have seen this thing. That is why I am saying. Similar item in my one of the audit. The thing was, these management, imagine a management needs, company needs 5 AC. This manager will go and buy 5 AC. But the money is of the shareholders' money, right? He is just an employee. He will buy 5 AC, come. And he is the one putting the depreciation, everything. Shareholders may not check everything. He put the useful life as only 3 years. Your useful life may be 10 years or 12 years. He put the useful life of 2 ACs was needed. He put the useful life as just 3 years. So after the 3 year, what happened is that AC will anyways function for 7 years, 7 more years minimum. So after 3 years, he made the entry, AC is damaged. So I am selling. AC's price was like, imagine 50,000 for that one AC. So now the AC is damaged, the useful life is also gone. I am selling it for like 5,000 rupees. It's gone, like only the machine value will be there. And he sold it for 5,000 rupees. And imagine who purchased it. His wife itself. And he'll put that AC in his home. This happens in businesses. Because whose money is gone? Shareholders' money. An AC that can work for 10 years, he showed that useful life is only 3 years. After 3 years, he reduced the value to call the depreciation and sold that because it's a deletion. AC is gone, so we are selling from the company's point of view. Nobody is going to come and check the condition of AC. So he sold the AC, and to whom it was sold? To his wife itself. When you go deep to his friends or something, and the friend will put it in his home, this manager's home itself, he'll put that AC in his home. This happened in one of the companies. Similar thing, not AC, one other product. So as an auditor, you have to check that. Verify whether all deletions are properly authorized. That is, if a manager is deleting something, make sure the senior person, CEO of that company, or not CEO, someone in the high official should ensure that the AC is okay, damaged, 3 years is only, you need to ensure that. Then it's okay. See that. Then cut off all the things of that 1 year, recorded, same thing everywhere. Completeness, same thing. Verify the PP schedule and tally the closing balances to the entity's books of accounts. That completeness means all the PP of that year should be recorded in the financials. Ensure that, that's it. Check the arithmetical accuracy of the movement in PP schedule and reconcile the opening balance with the closing balance. Movement in PP schedule means opening balance, additions, minus deletions, closing balance. Check the movement, whether it is proper, correct, everything. Then valuation. Valuation is important. I am focusing only on the important area. Valuation is important. Rights and obligation is important. Existence is, you can say. Valuation and rights and obligation is important for PP. Then see that all items of PP have been carried at a costless depreciation. When you are valuing PP, cost of PP minus depreciation you will write. That is what is written here. Make sure depreciation is properly reduced. And all the cost of PP, installation cost, all these things you will capitalize, right? Installation cost, transportation cost. Make sure that is done. What is valuation? Checking whether the value is correct or not. If a value has to be correct, cost of PP 10 lakh plus transportation cost, installation cost 1 lakh, 11 lakh. Minus depreciation of that year, 60,000. So 10 lakh 40,000. That should be the value. See whether it is correct. Calculation. Verify installation certificate to know the date of installation. Then only you can charge the depreciation accordingly. 6/12, 3/12, you do it, right? So to do that, you need to know the date of that asset is put to use. So for that, check the installation certificate of asset. Verify whether depreciation has been charged on all items except the freehold land. Freehold land, no depreciation. Same. And this is important. And make sure depreciation method reflect the pattern in which future economic benefits are expected to be derived from the assets. What do you mean by that? Depreciation method reflect the pattern in which future economic benefits are derived from the asset. Simple way I will say, you have two depreciation method, SLM or WDV. Which one to use for which asset? How do you define that? You are running a company, you bought a new AC. Which method should you use for AC? How will you decide that? This is accounting I am asking. It's not a life is more. It's actually like I'll say, we'll take the case of AC. First year, I bought it this year. This year AC will be functioning perfect. Next year, some reduction will be there, right? But after 5 years, AC will be, sound will be coming. The cold will not be that much. Everything will be like that. So 10 years, slowly, the benefit we expect from AC, the return we get from AC is decreasing. First year it was high, next year it is like this, next year it is like this, it is going like this. So here WDV is best. But if there is any asset, every year it is the same. Every year you are getting the same thing. In that case, straight line method will be better. So you have to select the depreciation method depending upon the pattern in which future economic benefits are expected, like pattern in which we will get the future return. If every year it is decreasing, WDV, else SLM, thing like that. So depreciation method for every item should be like that. There also there is a catch. This, if you go with different depreciation method gives different depreciation amount. So they will use it for manipulating the expenses. If they need high expenses this year, they will use that method accordingly. So you have to check that method is proper. Then verify verify whether the management has undertaken any impairment assessment for any items of the PPE. Verify whether the calculation of recoverable value and subject adjustment is done. Simple. Presentation and disclosure also okay. Then patent and copyright, you just read, you will understand. Patent, anything, schedule of patent, copyright. You know what is patent and copyright, right? Then you read this, you will easily understand. Nothing is there. You can read it on your own. Patent and copyright. Purchase from a third party. Let me see if there is anything like tough. Nothing is there. Investments. You read investments. I will explain patent because investment is very easy. It's easy for you. But patent, sometimes some of you may not know. The patent game, the in-house development of patent bought all these things. So it's better, I think I'll explain patent. Patent, to audit the existence. Existence is very simple. Schedule of patent, copyright held by the company should be procured from the management. Patent or copyright means something that you created for making the design of this Apple iPhone. It's a patent. The Apple company will have that. Design of everything is patent. Nobody can copy this design. Samsung cannot copy this design. So they have the right of that design. That is what we call patent. So there will be a schedule of patent, like a schedule of assets. What is opening value of the patent? Because this design now, these three the three camera design. Now the value of this is decreasing because this design came into existence 4 years back. The three camera design. Last 3 years they are using the same design. Now itself people are like fed up with the same design. So next year, so the value of the patent for this design, right, three camera design, they have a patent. So value of that is slowly decreasing now. Value of the patent is decreasing. Similarly, I'll take a very good example. Some new car design they launched in the market. For example, Swift car. When they launched it first in 2008 or something, that was the best design ever. Nobody has seen a car like that. Swift that time. So the value of that design was very high in 2008. Whether does it have a value now? No, right? Super cars are there in the market now. So the value of the patent will also decrease. The depreciation kind of thing, amortization will be there. So think like that. And there are two ways to develop a patent. First is I sit at my home and I design myself. Patent, or if I'm making my book, my audit book is there. Copyright is mine. So we create that. That is one way to create or patent. For example, I created a design, I created a software. So patent owns to me, I created that, I built it in-house. That is first option. Second option, you can buy patent. Simple example, Jeep, Jeep Wrangler, Jeep, you know, right? Jeep same design is used by Thar. Thar's same copy paste design is what they use. So I don't know whether they have bought the patent or they are in like some fight is happening between them. A simple example is, you know, Baleno, Suzuki Baleno, and Toyota, there is a car called Glanza. Both the car looks the same. So I think the design is from Suzuki. Toyota has bought that patent. So Toyota can also manufacture that design. If someone has a patent, nobody can copy that design. Suzuki made the design, Suzuki patented it, and it is given to Toyota now, the design. So that is patent bought. Two type of patent. Patent you can develop, patent you can buy also. Then schedule of patent. See the schedule of patent and copyright held by the company. That's it. Then document of each patent and the contract paper of each copyright should be physically verified by the auditor. Document of each patent. This design will have a document, a certificate. Examine that. Simple. Then rights and obligation, ownership of the patent and copyright should be verified in whether Apple auditor will verify this, whether this patent is owned by Apple itself. How will you verify? Look at the certificate, the name of Apple should be there. That's it. And then if it has been purchased, that is if patent has been purchased, like Toyota purchased it from Maruti, agreement surrendering it, that is agreement in which Maruti give that patent to Toyota, that is an agreement surrendering their patent in favor of the client should be examined. Maruti will give a certificate to Toyota, you take my patent, I surrendered it. That should be examined. Last renewal receipt should be examined to ascertain that the patent has not lapsed. So when Maruti has this design, when Maruti give it to Toyota, Maruti will put one condition. You can only use it for the next 3 years. And Toyota will anyway pay for how much car you, and the money will not be a bulk amount. Most probably it will be like, I give you my Baleno's design, you manufacture Glanza, and for every car you manufacture, give me 10% of that. For every car you sell for 7 lakh, give me 70,000. Every car. And you can do this only for 3 years. For 3 years. After 3 years, because I'll tell you why. Just imagine, Maruti designed this one. And Maruti gave the design to Toyota. But the thing is, Toyota have better engine. Car engine is much better in Toyota. Features also much better in Toyota. So Maruti designed something and Maruti gave the patent. Now imagine Toyota made a Glanza and now nobody is buying this Maruti's car and everybody is buying Glanza. Who lose the market? Maruti lose the market. So Maruti will not give it for a long run. Maruti will say you use it for 2 years or 1 year. Normally they will only give it for 1 or 2 years initially. So use it for 2 years, and even if Toyota is making it superb, but after 2 years they cannot do that, right? Patent is gone. Maruti can come up with Glanza again. Baleno again. So what is the renewal receipt? Every year they have to renew this receipt. Renew the patent, whether Maruti is ready to give to Toyota or not. So the last renewal receipt should be examined to see that patent has not elapsed. Auditor has to verify that the renewal fee have been paid on the due date by being charged to the revenue account. See whether renewal fees has been paid on the due date itself. Ensure that the copyright shown in the financial statements are yet to expire. That's it. Then valuation also I will teach. Ensure that the patent and the copyright are being shown at a costless amortization charges. It is shown as a patent is similarly like a tangible asset itself. Cost of the asset minus depreciations. For patent, cost of the asset minus amortization. Assets, physical assets, depreciation. Intangible assets, it's amortization. See that amortization rate follows the pattern in which benefits are expected to be consumed. Like I told, in depreciation, what is the pattern of getting benefit from AC? Every year it is decreasing. So WDV. For what is the pattern of getting benefit from patent? Amortize according to that. Maybe this year, suddenly when you are launching a new design in Toyota, everyone will buy it. But next year, sometimes it will go slowly. So use WDV kind of amortization. Then, if the payment, this is important. This is for a payment bought from a third party. That is Toyota buying it from Maruti. This is in-house developed patent case. In this case, In case it is purchased from a third party, cost of the patent and copyright is the acquisition cost, and cost of registration you need to add along with it. Then renewal cost of registration also you need to include with it. Acquisition cost plus registration cost, like machinery installation cost you add. Then renewal fee should be charged to revenue. It is not a capital expenditure. Renewal fee should be charged to P&L only. Similarly, for in-house developed patent, if patent has been developed in-house, let me ask you this. Let me test your accounts level. There are two cases. First case, I developed a patent in-house. In-house I developed a patent. So for that I incurred a lot of transportation cost, like small, many cost. Transportation cost, labor cost, so many costs I incurred. Should I capitalize it or should I put it in the revenue? Like, should I include it in the total cost of the 100, like not money, I mean, I developed a patent inside, I draw a design and I put it as a patent. And for this purpose, I incurred the basic expenditure of 5 lakh rupees. But other than that, this design, drawing, sketching, I don't know this design, I only have mind. I went to a person to draw the design. For the traveling expenditure, I got 300 rupees. So many other expenditures are there. Should I include that in the cost of the patent or not? Like you learned it in the accounting standard. AS 26, yes. Same thing is what is mentioned here. See it. In this case, you bought it from a person. So the buying price plus cost of registration only included in the cost of acquisition. In this case, you developed it yourself. So the development and research phase, that is not there in auditing, but still they are actually saying this. If patent has been developed by the client in-house, all the developmental expenses, legal charges, everything should be included. Just the AS itself, same thing. They here AS 38 and 26, it's written there, same item. Cost of patent should be written off over the legal term of its validity or over its useful time of effect. Because same, I'll give you one more example for this. Legal term of validity, useful life. Maruti developed the patent. Maruti and the useful life for Maruti, that Baleno's design is for 20 years or how many years? Let's put it 10 years. So for Maruti, useful life is 10 years. For same patent, this guys bought Toyota, and for them the validity is only for 2 years, right? So their depreciation will be for 2 years. Make sure like that. Same design, for Maruti it is 10, for them it is 2. Not relevant in auditing, but I am simply saying this. This we can easily read. Investments, it's not a tough thing. Inventories I'll teach. Loan given I'll teach. Trade receivable, trade payable, all these things are like super easy. Other share capital also I'll teach. Where is inventory? Inventory. Inventory existence you can just read, it's nothing. Physically verify whether that inventory exists or not, check it with the bills, all these things are there. Cut off also, the valuation is only a bit, because inventory for a company, 3 types of inventory will be there. For a manufacturing company, boat, earphones, raw material will be there, work in progress will be there, finished good will be there. Okay. The auditor must determine the appropriateness of the method of issuing inventory for valuation purpose. See whether which method is actually better for that. LIFO, FIFO, many methods, company may be using any one method. See whether it is accurate or not. That's for a company using LIFO, is FIFO better? Is company doing something wrong? Check that. Then value of raw materials must be examined based on the cost of purchase plus the carriage plus the duties plus the market price of raw material and estimated cost of disposal. Like all the cost of raw material should be clubbed. The auditor shall see that lower of cost and NRV is given as the value. Everyone knows that, right? Lower of cost and NRV, that is how we value net realizable value. Then for work in progress, ensure that work in progress has been valued considering the completed stage of production and all the direct and indirect cost associated. Raw material total cost was 100. Now it moved to work in progress. In work in progress, different stages will be there. If it is in stage 1, that means 70 rupees is added to the cost. If it is in stage 3, 100 rupees is added. So depending upon that, value it. You don't need this calculation, anything in your mind. I am saying only for your understanding, so you will remember this. This is pure theory, hardcore theory paper. Even if you don't know what the hell it is, write the same sentence, you will get it. Finished goods, ensure that the cost of finished goods incur all the direct and indirect cost. Cost of the finished good also incur. Direct cost means the material cost, everything. Indirect means the rent, labor, all these things. That's it. Loan also, what is important? Existence is very easy. See the short-term loan, long-term loan schedule, compare it with everything. That is very easy. One second. Existence. In case of claim made against insurance companies, railways, verify that only claims that are admitted shall be. This is very important. In existence, these 2 points are easy. This is one I'll explain. I'll only explain the tougher area. Why should I waste my time reading everything and you also will feel bored? We will touch upon the important areas. This is something that you need to understand. Company has an insurance policy, and the fire something broke out or some issue happened in the company. Now we need to get the money. So when we are here, money is receivable to us, and normally we will record it as advance. Like advance means what? Loan given and money receivable, right? Similarly, insurance claim is also receivable to us. It's coming under the head of like in the process of advances. So in that case, verify that we are only putting that amount in advance only after insurance company admitted our claim. Before that, we cannot. How can we say that I'll get how much amount I can put? I have taken insurance of 1 crore rupees. My factory burnt. I don't know what is the value. It completely got burnt, and I'm just simply writing my insurance claim receivable is 1 crore. No, I cannot write like sometimes company will only give me 80 lakhs. So once the claim is admitted, only put that. That's only sentence that is written here. Nothing more. Obtain the copy of statutory returns like IT return, GST return. Verify the amount recorded as per books and simple, nothing is there. Rights and obligation also very easy. Cut off, valuation, obtain the aging schedule of different loan and list of all loans under litigation. Verify the previous year estimate of doubtful loans, and after discussion with the manager, verify the adequacy of all the loans for doubtful accounts. This here I'll explain. The loan, here we are giving loan. It's just like a debtor game. We sell something, so money is receivable. Here also we gave loan, money is receivable. In debtor's case, if we think that the debt is doubtful, we will write it off, right? Similarly, in loan also we gave some loan. Last 3 years the money person has not paid. So here also write off everything will be there. So make sure that verify the previous year's estimate of doubtful loan that which will not be recovered after discussion with the management, and verify the adequacy of allowances for doubtful loan. 10 lakh rupees is receivable. Last 3 years, the money has not been received. So we write it down to 8 lakh or 7 lakh or 6 lakh. So verify the adequacy, how much amount should be written down, because we don't know that. Only management may know that. Management may know the person, the client sometimes the client may be dead. Customer may be dead. Who will pay the money? No one will pay the money. So it's 0. So verify the adequacy of that allowance. That's it. Nothing. One more. Sorry. Obtain the movement of bad loans to provision or write off. Same thing itself. If the loan is completely bad, you know the difference between bad and doubtful, right? So if it is doubtful, whether the proper allowance is given. If it is bad, make sure it is written off under proper authority only. Don't simply write off. Then trade receivable is very easy. Just read, it's very easy. Nothing. Trade receivable, trade payable, and cash is also very easy. You don't have to like. I just went through it, glanced. Nothing is there. Share capital. It's share capital is share capital is important. Okay. And once again, I'm saying in P&L case, sales, purchase, finance cost, employee benefit expenses are the most important items. Most probably they will ask from that. Depreciation also. Balance sheet, when it comes, trade receivable, trade payable, obviously. It's very easy. Cash, they will not ask like that much. No, then most important is PPE, share capital, borrowings, they can ask. The other like other equity, other things, etc. Like you do it at the last. And whenever comes, in your common sense, write points and come, even if you don't know the answer. In this chapter, financial statements and different entity also. Even if something comes which you don't know, you have not studied audit of educational institution, think in your mind, just write. If you have not studied, just tell me, how will you verify an education institution? You can simply vouch the bill, fees received. What? Just think what are their incomes first. Fees, all the incomes first think. Then how will you verify that? Write it in your own language. If it is a 7-mark question, you will get minimum 3 or 2 or something you will get, even if you have not studied. Similarly, this also. They are asking occurrence of share capital, they asked. Just think in your mind, how, not occurrence, sorry, existence of share capital. How will you verify? I will verify with the register of share capital, with the books of records. Think in your mind and write in your own language. 1 or 2 marks you will get even if you have not studied. So share capital is important. This is very important area. Conduct a reconciliation between opening and closing balance of the share capital. Opening share capital, closing, conduct a reconciliation. What was the new shares issued, shares buyback, anything. And see any new issue, capitalization, buyback, redemption, anything. In case of change, this is change. In case of any change in that, ensure that the revised capital is within the limits of the authorized capital. You know that your share capital cannot exceed authorized capital. So check that. He must examine that all the transactions affecting the change in the share capital are genuine and are properly authorized. He should examine the resolutions of board of directors and shares for this purpose, shareholders. Nothing is there. Rights and obligation, very easy. Ensure that the new shares issued satisfy all the regulatory requirements of the Companies Act. When you are issuing a new share, you have to follow a lot of rules of Companies Act, SEBI, everything is correct, check it, simple. See that no shares have been issued at a discount. In case shares have been issued at a premium, see that balance of share premium has been utilized only for permitted purposes. Actually, you can issue shares at discount, but only sweat equity shares, but not relevant here. It is another topic, accounting. But here it is actually written, when you are issuing shares, make sure company has not issued a share at discount. Actually, company can issue a share at discount, sweat equity, but here it is wrong. It's actually wrong, they have written. But okay, for your understanding, I told you, they can issue sweat equity shares at discount. That is the first point. Then the next is that, this is first. Then if 10 rupee share, company is issuing for 12 rupee. 2 is securities premium, right? There is a limit. This 2 rupee company will get 1000 shares are issued. So 1000 into 2, 2000 rupees securities premium money is there with the company. There is a certain restriction on this money. This money we cannot use it for all the purposes. We can only use it for like writing of preliminary expenses or what was the other things, bonus shares or something, issuing bonus shares. So make sure that money is only utilized for the limited purposes. Purpose is not mentioned there. The only thing is that this is wrong. Ensure that no shares have been issued at discount. Companies can actually issue shares at discount, but see whether issued or not. With respect to the issue of sweat equity shares, right shares, bonus shares, ensure that the rules have been duly complied with. Whatever it is. Sweat equity share, right share, bonus share, everything you know, right? Not even CPT, right? Then that's also done. Other equity means reserves and surplus. These are the things coming under other equity. What all you put in the reserves and surplus table, that's it, simple. Then what are the audit procedure? Just read it, it's very easy, nothing is there. And they will not ask you also. Most probably they will not ask you that also. Borrowing, this is super easy stuff. Loans taken by the company, just read that, you will get. Trade paper also very easy. But there is something that is very difficult, this one. These topics, please don't skip it, these topics. Because everyone will study the share capital, borrowing, everything. These topics people will miss. Audit of special items of transaction. There is something called audit of unpaid dividend, audit of interim dividend, audit of normal dividend. That is like a crucial area. Don't skip it. Here, rather than share capital, this is the most important. Alteration of share capital, change in share capital, reduction of share capital, increasing share capital, all these things. So, alteration of share capital, the audit procedure. This area, please study this, I would say first, then go with the areas. Here also, I'll just mark it. Alteration of share capital is important. Issue of bonus shares is important, but okay, still keep it. Splitting of shares also keep it. Then issue of debenture. Here it is said about the debentures and all these things. We don't need that. Only study the audit procedures. Audit procedures only, because it's an auditing examination. And the most important is this one, payment of dividend. In this area, here they have written what is interim dividend, procedure for dividend, all these things they will not ask. Most probably, they will directly ask you what are the audit procedure for final dividend, audit procedure for this one. So we will focus on that. In 20 minutes, we will finish the entire chapter. Do you have any more classes soon? Like auditing is done, other subjects here itself. When is that happening? 5th. 4th naale. Okay. My lecture was scheduled till tomorrow. And that was like actually a mistake, because when the people who calculated, they like for an inter auditing 100 marks paper, we are taking 4 days or 5 days. It's like a 50 marks paper, it only need like 3 days something. So, but if let me think if I can give you a question bank or something, but because you get repeated questions, same like a 3-year-old question also you'll get it. How can it? Let me see if I can do something on that, like analyze your question papers for the last 3, 4, 5 years, then see what are the repeated questions, something, let me see. But we cannot trust that also. That is a problem, because yesterday CA final FR exam was happening and many of my friends are writing examination. So like one of my closest friends, she called me after the examination. She was like crying, because when May 24 onwards, last May year 24 onwards, they changed the syllabus, the subject pattern. Now they are asking like high IQ level questions, not even a single question from the textbook is coming, high level IQ questions. And she was writing the examination for the last many years. And she's a too brilliant girl. But the only issue with her is that she studies in a pattern, she can memorize the entire book like a chitti. She don't know the concept anything of FR. She'll just take the book, study all the questions, like whatever is asked in the, if any question from the book comes, she'll write. But that will not work in CA final. That is a problem. CA inter and everything that will work. But final, new syllabus, old syllabus it used to work. I can say old syllabus before May 24 it used to work. So since May 24 she was like, oh my horrible, I could have cleared it before that, because now they changed the pattern. New level IQ questions are coming in. You have to think and solve, no repeated questions coming in. 1 or 2 repeated you will get 10, 20 marks. Rest of the marks you have to write and solve. And for the last 1 year she has changed her mind and studied everything conceptual kind of like, oh, she was so good with the chitti, but now she changed the format and studied. Yesterday the question paper was an old chitti format. Everything was copy paste. And she called me, you are the one who told me to study in this format. If I was studying in the old format, I would have got 90 marks in the paper. I told, what can I do on this? So there is a problem like this. Institute will tackle us like that. So that is a fear I also have. If I go through your paper last 4 years and I say this much is only important and you study that much, go there. If they come up with a bouncer paper, you will put the blame on me. I don't want to take the risk. That is why I will showcase the highlighting topics I will do. Then I will anyways do the research and put it on the Telegram channel before your exam. I will try to do that, because May I have some serious things happening. You will get to know in June, July. If you are following my Instagram, you will know what it will be. So audit of item, alteration of share capital. Auditor must, alteration of share capital means capital increase or decrease, changing. In that case, auditor must confirm that the alteration was authorized by the articles. Permission to alter should be in articles. Verify the minutes of the board meeting and ordinary resolution passed in the general meeting. Verify that, simple. Verify that alteration has affected in copies of, when a share capital is all changed, in the MOA also changed it. Obtain the reason for which MOA, memorandum of the company, is altered. Why it was altered? What was the reason? Just write it, simple. Just keep 7 points in your head. That's it. Except perfect 7 is there. So it is very important. He shall check whether there is any change in the voting percentage of shareholders. Earlier, 10 shares of 100 each was held by each shareholder, and they had a voting percentage. Now, since the reduction happened, value everything changed, right? So now whether there is any change in the voting share percentage, check that, because voting percentage is based on share they hold. Then confirm that the alter share capital denomination should be more than rupee 1. And today, like if you can sit till 1:30, we'll have the lunch at 1:30. 1:15 I'll finish off this chapter. Anyways, we'll finish off this. Then 15 minutes I'll give you the guidance on writing paper, like presentation, all these things. I have it in with me. Because if I go today, I will not be coming back here in the next 1 week or something. So like I thought, anyways, you have come here, so let it go. Online also, YouTube also, it is going. Let it go like that. Paper presentations. Small things I have noted. Everything I don't know, whatever that came to my mind, I noted. Then issue of bonus shares, you can just read it, nothing is there. Verify that the proper accounting entries have been passed. Register of the members have also been checked. That is okay. Bonus share was authorized. Minutes of meetings verify. Company issue fully authorized bonus share only to members only. Simple stuff, nothing is there. Splitting of share also, it's very easy. Splitting of share means 1 rupee share, 1 share of 10 rupee split into 2 share of 5 rupees each. That is splitting of share. So if I am holding 100 shares, I will now have 200 shares. But the value will be the same. 100 shares of 10, 200 shares of 5. That will be it. That is splitting of share. How to audit that? 4 points may not be that important. If they are asking this, they'll ask splitting with reissue or something. Together they'll ask. Only 4.7 marks question will not be asked. Then this is important. Reissue of forfeited shares. What do you mean by forfeited share? Cancelled share, right? The money, like unissued, fully not issued. That's it, forfeited. So these forfeited shares company may reissue in the future. So that in that case, when the reissue of forfeited share happened, how you as an auditor will audit that? That is a question. First, ascertain that the board of directors has the authority under the articles of association to reissue forfeited shares. Sometimes as per the article, board of directors may not have the authority. Check whether they have the authority to do that. Vouch the amount collected from the person to whom the shares have been allotted and verify the entries recorded in the reallotment. Got the money, vouch it, that's it. Verify the surplus amount arising on reissue of shares credited to the capital reserve account. That means when you reissue, first time when you issued, you got some money. Now you are reissuing also, you will get some money. What is the surplus amount? Show it in the capital reserve account. That's it. Verify whether partly paid shares are forfeited for non-payment of call and reissued as fully paid shares. See that. Partly paid shares are called off and reissued. Reissue is considered as an allotment at a discount and compliance of the provisions of section 53 is essential. Issue of debentures also easy. Redemption of debentures also easy. Sorry. Here, this I need to explain. In issue of debentures, audit procedures. Auditor should verify that the prospectus has been duly filed. Prospectus has been duly filed with the registrar before the date of allotment. See that. For issuing a debenture, you need to file prospectus. See that it is duly filed. Simple. Check the amount collected in cash with the counterfoils of receipts. Examine the debenture trust deed and conditions. Debenture has been covered by, this you know what it is. Mortgage of charge for a debenture. That is why I thought I need to explain this. It's a very simple thing. Mortgage of charge means what is the process of debenture? I am a company, I need money. I don't have money. I will tell public that I am issuing a debenture. Debenture is a paper. I will issue a 10 lakh debenture, 10 lakh paper to that person. That person will give me 10 lakh money. So for the next 10 years, that is a term of debenture. 10 years I will be paying him interest. And after 10 years, I will repay the 10 lakh back and he will give me the paper back. This is the process of debenture. But sometimes these people will not believe the company. 10 years after, what if the company does not pay the money, or company got some bankrupt or something? Who will give us the money? Government putting money in the bank, we will trust because it is guaranteed by the RBI and government. But how will we trust to put the money in the company? So to get the trust, company will say one thing: you give me the money, I'll give you the debenture deed, and I'll also give you a security of one of my asset. Company has a building, so I'll give you that building as mortgage also. Even if I don't pay the money, you take that building. You have the authority. It will be mentioned there. That is what we call mortgage of charge in case of a debenture. Got it? Like giving a security also along with the debenture. Simple. So if debentures are covered by mortgage of charge, that is, you issued a debenture and mortgage also, like a security also on that, then it should be verified that the charges have been issued. It should be verified that the charges have been correctly recorded in the register of mortgage and charges and also registered with the registrar of companies. If you issued something, debenture, mortgage of charge you issued, make sure this is entered in the register of charges and informed to the registrar. Whenever charge means giving a security to someone, that is what we call a charge. So that should be, there is a separate register for that. Enter in that and inform the registrar also. Simple. Then compliance with the SEBI guidelines, where debenture is issued as a fully paid up to vendors, the contract in this regard should be checked. Simple. Then redemption of debenture also very easy. This means these are the funds from which we can redeem debenture. Redeem means repay debenture. Now money is with me, I need to repay him. First I can, either I want, if I can, I'll repay monthly or yearly or something. Sometimes I'll repay at a fixed date only. Sometimes I'll repay whenever I feel so. All these things will be there. Then payment of dividend, very important. Payment of dividend, this is nothing. Audit procedure is only important. Only, where is it? Interim. You know what is interim dividend, right? Dividend paid in the mid of the year. Unpaid dividend. A dividend has been declared by the company but has not been paid or claimed within 30 days from the dividend declared here. Dividend has not been paid for the dividend declared on 1st June, but till 30th June the dividend has not been paid to that person. Then it becomes unpaid dividend. Dividend declared but not paid. And in that case, once 30th June, 30 days are over, in the next 7 days, also you will wait for that person to come and collect the dividend. Still it is not there. Then at the 7th date, within these 7 days, transfer that money to unpaid dividend account. It's a separate bank account. Unpaid dividend account, transfer that money and keep it there. This is a provision of unpaid dividend account. Just understand this, I'll explain the provisions. This and punishment, everything, just read, it's not important. This is very important. Audit procedure for final dividend, audit procedure for interim dividend, audit procedure for unpaid dividend. Very important in case of dividend, because audit procedure. So, shareholder should examine the audit procedure for final dividend, normal dividend that happens. What is audit procedure? See, examine the article of association to ascertain the differential rights of shareholders, whether any shareholders have some extra rights or something, see it in the articles. See one thing, the points are the same. Whatever I have written SSS, audit procedure of interim dividend is same as the, some points are same. So, like in the different entity, you can easily learn. Examine AOA, examine the minute book of the directors and shareholders meeting to verify that the dividend was properly recommended by the directors, passed by the proper resolution also, simple. Verify whether the amount of dividend paid was calculated accurately. Amount was properly calculated, because from profit you are taking the dividend. Sometimes some fraud they'll do some calculation mistakes, everything. So make sure it's not there. Based on the, ensure that the provision of Companies Act, everything was complied. Verify whether the total amount of dividend was transferred to the separate bank account in a scheduled bank within 5 days from the declaration of such a dividend, and whether dividend was paid to the shareholders only out of that account. Company declared a dividend on one date. The moment company declared a dividend as total 30 lakhs we are going to pay as dividend to different shareholders. Next day itself, that day itself, we need to put that money in a separate bank account, not in the company's bank account. Put in a separate bank account of the company, and from this account only they need to pay to dividend to shareholders. Don't pay from this main account. That's it written here. And auditor need to check whether company is following that perfectly, whether company transferred it in 5 days and whether company is paying from that. That's it. Then ensure that the dividend has been paid to the rightful owners only. That is only the authorized shareholder will only get it. And there is one very important thing that you need to understand. It's very crucial. You know what is pre-acquisition. Superb. You know what is pre-acquisition dividend. Everyone knows, right? And how the process of that works also. Because in amalgamation or some chapter you are learning that. What in accounts? Yes, somewhere you learned that pre-acquisition dividend. Consolidated. Consolidation. Yeah. So, just means that a owner of the dividend. Imagine I'll just give you a hypothetical example. Don't complicate on it. Someone who don't if everyone understands, everyone know it, pre-acquisition. Then I'm not explaining. Okay. That. You don't know. I'll explain, no worries. If you don't know anything, tell me, like whatever it is. Even if you don't know the meaning of distribute, tell me, I'll explain. That's it. So pre-acquisition dividend means a share. The thing is that the dividend will be paid based on who owns the share, not based on, dividend will be paid to the person who owns the share only. The simple example, how can I explain it in a picture? 1 year, just think of April, just think of Jan to, not a little, think of April to March, the accounting year. There was one, I have one share of Reliance, and I hold till April, May, June, July, till August, that is April, May, June, July, August. 5 months I was the holder of, I hold the dividend, I hold the share, and the price of this share was 1000 rupees. And in August I sold it to a different person. From August he is holding the money, dividend. So the price is 1000 rupees, right? But the entire dividend, when the dividend is paid for the full year. Imagine the entire dividend is, say for example, 200 rupees. Just imagine. And here I sold, when I sell this thing to Mr. S, I will sell it for 1000 some figure, like 1100, 1000. Forget that. One more thing. In this 200 rupees into 5 by 12 is my share, because I held that thing for the 5 years, right? So 200 into 5 by 12, what is that amount? 200 into 5 by 12, some amount, just imagine it is like 80 rupees. So when I am selling this, I will include this 80 also. This is the concept of pre-acquisition dividend. Got it, right? Whatever that extra money is, I will include that, because this period I hold the share for 5 months. So I need the dividend for 5 months. And what is the dividend for 5 months? This is the dividend for 5 months. Hope you got it. Clarity. Any more clarity you need on this? Right? You have any doubt? Ask me, tell me. One more I need to explain. That portion of the dividend, right? That 80 rupees we told you. Because when I'm buying, when I'm selling it for 1000 rupees a share price, but when I'm selling, I'll sell it only for 1080, because this portion is my part of the dividend. And for him, the person who is buying him, that is, the dividend portion is 80 rupees is the dividend portion. That is his pre-acquisition dividend. Because before he pre-acquisition, before he acquired, what was the dividend portion? 80 rupees. And I will show you the accounting entry also. Now we will think from the point of view of S, the buyer. When buyer buys it, he buys the, imagine the share comes in, whatever comes in, share account debit to, he'll put 1000 only. And 80 goes for the dividend, pre-acquisition dividend, he'll put it like this. I don't remember the exact entry, the normal is this, pre-acquisition dividend to cash he spent, 1080 he spent. And now you'll understand, in March, when the dividend, when he gets the full dividend is 200 rupees, right? I told you, whoever has the share, he will get the dividend. At the time when company gives the dividend, who is the owner of the share? He will get the dividend. So imagine company issues the dividend at March. So at March, who is the owner? S is the owner. So S gets the entire dividend, that full year's dividend S will get. So S will get the dividend as cash account debit to, what is the amount? 200 rupees. He'll get 200 rupees. But in this 200 rupees, he'll credit this 80, because he only gets 120. Got it, right? Pre-acquisition dividend. Think from the point of view of S, not from the point of view of me. S is the buyer. Whatever payment he paid, that pre-acquisition, before his acquisition, dividend portion. So, why I told this? Something to explain somewhere. Where was that? Audit procedure, whether the amount of dividend, where was it? Verify the dividend. Which topic I wanted to explain? Right? Rightful owner. Okay. Rightful owner. So, when the company is issuing dividend, make sure it is actually issued to the Mr. S only. Because now S is holding the share, not this guy. Okay. Verify whether sufficient effort was made by the management to distribute the dividend within 30 days from declaration. Declared 30 days, it need to distribute. One more thing, keep in mind, dividend is declared at this date. In the next 5 days itself, he need to put it in a separate bank account. I told you. Within the next 30 days, total 30 days, he need to give it to the people. If not given, within the next 7 days, transfer it to separate the unspent dividend account. This is the entire process. And then audit procedure for interim dividend. Nothing, everything is the same. Just copy paste from the same. They examine article of association to ascertain payment, examine minute books of director. Only this is the only extra point. Critically evaluate the justification in paying interim dividend based on interim account. That is, should the company actually pay the interim dividend? Why is company actually paying the interim dividend? What do you need to think like that? You need to critically evaluate the justification in paying the interim dividend. Should company, what is the justification the management is saying to pay the dividend? What is the reason? Why there is an interim dividend needed? You need to look at the reason. That's it. Other 2 points are also the same. Then audit procedure for unpaid dividend. Dividend has not been paid. Declared but not paid. What will you do? Collect a statement or list containing every detail regarding the unpaid dividend. First, collect a list. Now we are going to audit the unpaid dividend. First, collect the list. Then conduct an inquiry to identify whether there was any fault on part of the company, and if so, what action has been taken against the company. Unpaid dividend has not been paid. See whether is there any fault in the company. Unpaid dividend can happen because of 2 reasons. Shareholder don't come to take the payment, or company does not pay the money. 2 reasons can happen. So see whether there is any fault with the company first. Then verify the statement provided by the management with the supporting, like the dividend register, return to warrant, bank statement. Management provide a statement, cross-check it with these things. Verify whether unpaid dividend has been transferred to a separate account, namely unpaid dividend account, within 7 days. What procedure we told. Verify whether any fault in part of the company, and if so, whether they have deposited interest and penalty. Simple. Verify whether company has published the detail of unpaid dividend in its own website. If there is company declared dividend for 10 shareholders, 9 shareholders come and took it, 1 shareholder don't took it. So that is an unpaid dividend. So company has to show it in company's website. So sometimes the shareholder may be, I may have invested in a Reliance company 10 years back. I may have forgot that. Now I am living in California with Happy. So 10 years later, when I get the memory of Reliance, when I go to Reliance website, I can see unpaid dividend is shown. Simple understanding. Then any payment of previously unpaid dividend must be verified by the auditor to see that the same has been paid to the rightful owner. In case any amount of dividend is remaining unpaid for more than 7 years. 7 years. That is, here dividend declared, in 5 days you transferred it to a separate bank account. From here to in 30 days you hold it with the thing, and 30 days also no payment was done. So in the next 7 days you transferred it to unpaid dividend account. Now the money is in unpaid dividend account, and this 7 years still nobody has come to collect the money. Now from this 7 years, now transfer the money to Investors Education Protection Fund. Till 7 years no one has come to collect the money. This one chart you draw, keep it in your thing, that will be very easy for you to recollect the entire days and date. Now it is easy, but 3 days after you will forget this. So a pictographic memory would be better. The auditor shall verify the same along with the interest accrued thereon has been transferred by the company to IEPF. The money is there for 7 years in the unpaid dividend account. Since money is there, money will get interest also. So total amount should transfer to IEPF. Pinne verify whether all the shares in respect of such unpaid dividend has been transferred to IEPF also. That is, 7 years nobody has come to collect the dividend. So that share also, now we have transferred the dividend, but that share also, the entire share also transferred to IEPF. Because 7 years the damn guy has not come to collect the dividend, or the dividend has not been transferred. That's it. Done. We are done with, finished like entire auditing, and some topics like I gave it to you to read. Any doubt, anytime, text me. I guarantee I'll reply within 12 hours minimum. So now I'll give you some highlights about, I forgot where I've written that. Then one second, let me see whether it is. Yeah, where is the notes? Many things you have to. So what are the doubts that you have? What is your presentation mistakes, or how to revise? What are the things you need to know? Like someone came to ask me yesterday, right? Sir, can you guide me on presentation mistakes, presentations, revisions, etc. Yeah, he was. So what is your doubt? Like, tell me. I'll explain anyways. Don't worry. How to present the audit paper? Okay, audit paper. That is one question. Okay, next. Any? Time management. Okay, I'll also guide on that. Next. Any doubt? Ask me anything related to exam. I have it with me. So first we'll think of these two. Audit writing, right? Presentation mistake. Number one thing in auditing is that you have to study theory proper. Then only you can present. First fact, that is a fact. Whatever point is there, try to memorize the key words only. Don't try to study the entire point on their own. It's very hard. Keywords, like the highlighted words, like the fixed asset register, fixed asset verification, investment register, investment. Those are the keywords. The rest you can create, the language you can create your own. Number one, when auditing, only write answer in points. In question, sometimes the textbook, it will be in paragraph. But when you are writing answer, only write answer in points, and after one point, leave one line and write the second point, because your handwriting may not be good. So make the answer big. It's a 7-mark question you are coming in. So if your handwriting is like too small and you write it in 7 points and done, sometimes when they look, this much, 7 mark, they not, some foolish invigilator may not give you mark. So examiner, so write every point. If your handwriting is bad only, leave one line. If your handwriting is like too good, then it's okay without that. That is one thing for presentation. Revision of auditing also, don't try to study today and don't try to recall it today itself. You will not get it first thing. Like I told you right yesterday, there is something called revisiting technique. You can just go to my YouTube and see that actually works. For me, it worked. For some students, if you are unable to recall auditing or theory papers, try that technique. That will work. That means you study one chapter today, full day. At the end of the day, don't recall. End of the day, revisit the chapters. Just look at everything and structure and go. Next day morning, revisit it again. Because revisiting takes only 5 minutes, 10 minutes. Recalling is frustrating. Revisiting is not frustrating. Next day morning, revisit. Next day evening, also revisit. Then third day morning, try to recall. 3 times revisiting, 1 time recall. And once you finish your auditing study for next 1 month, imagine next 3 days you are studying auditing and you finished auditing. And 5th day onwards, you are starting accounts or some other subject. Don't do that. You do it, but at the end of like 30 minutes you keep for auditing, or 20 minutes or 10 minutes, auditing or other theory paper, any theory paper. And practical papers also, every day keep 1 hour, the last hour before you sleep. If you are sleeping at 11, from 9:30 to 11, 1.5 hour, for revisiting what you have studied, previous things. You studied auditing 3 days, now you are studying accounting. When you are studying accounting, revisiting audit also. Just go through I'm not asking you to recall. Just get familiar with that, keep in touch with that sheet, page, everything. And in account papers also, accounts or practical papers, some amalgamation questions or something that's very tough for you. You learned it today. Tomorrow, you are learning costing or other subject. But every single day, keep that 1.5 hour today. Just go through that question. Just go through the tougher question, something like, all the tough things in all the subjects, you mark it and keep it. I used to keep a flag, right? We'll get the this length sticky note, like this length, this size only. We can keep it outside the book like this. So every book I had, only the toughest things. Auditing, all the pages I used to look, but practical papers, toughest questions, like if there are 20 questions in a chapter, 2 only you select or 3 only you will select. Don't select the 5, then it will never happen. So 2-3 questions, around 20 percentage questions per chapter, toughest questions, keep the flags. And every single day, before you go to night, just go through it. And you studied practical paper today, that question was tough. Tomorrow when you are revising it, it will take, revisiting it, it will take you 3 minutes. Next day it will only take you 2 minutes, because you are getting familiar every single day. You do it for the next 40 days. Whatever happens, if the same question comes, you close your eyes and write, the answer will be there. Because you will never forget, because every day you are, because recalling, what is recalling? Understand this phrase. Once you understand this, then the life becomes, studying becomes easy, because you know the mechanics. This is your brain. Oh, then the brain like this is your brain. Imagine this is your brain. And you will think, I will properly draw one person. Whatever it is, you have a brain here. Oh. You have a brain. So this is the book. You are actually putting in this, and revision is you are taking it out, right? So first put this in properly, then try to take out. You are studying only one time today, one chapter you took, one topic you will be studying only in the morning, 10 to 11 am you studied that topic, 11 to 12 you other topic, 12 to, and at the end of the day when you try to recall the thing only you have studied one time, how can you expect the brain to get it out? First get it in 3-4 times. Proper study one time. That is one time we did. Then next time revisiting, we are getting familiar with the page again. Next time also we are revisiting 3 times. Now we got the item 4 times into your brain. Now try to get it out, you will get at least 50 to 70%. Get it in first, then try to take out. Everyone tries to recall and they are not getting, they are frustrated. This is a problem, recalling problem. In auditing, then the presentation I told you, line by line we present for number 1. And if there is any case study based questions or something, for example, yesterday you showed me one question where audit of hotel was asked. There just, the only thing is audit of hotel, just the heading, audit of hotel, just the procedure, you write it. But at the end of the line or in the beginning of the question, normally case studies are not there in CMA. But still, if some small something come like that, mention it like that. As per audit of this hotel, some name will be there in the hotel, right? So these are the procedures, and auditor's name will also be there. Auditor Mr. Raju need to follow in the audit of this XYZ hotel. Just give a or introduction or conclusion also. Introduction also, Mr. Raju need to follow the following procedures for audit of hotel. So sometimes 1 mark will be there for that suggested. So do that. That is what I told. So now we talked about, what are the things we talked about? We talked about revisiting, we talked. Then audit, presentation, we talked. Presentation, one more thing also I can say. Don't never blindly circle an MCQ. You may not know the answer. If there is an MCQ which you may not, you have studied auditing properly, at least 70-80% syllabus, and you don't know the answer. Don't blindly, 1, 2, 3, 4, like will do it and circle it. Don't do it. Do the elimination method. Always do that. Elimination means what is not the answer. Among 4, at least if you have studied auditing, at least you can eliminate 1. If this is not the answer, then the probability increases 33%. If 4 answers are there, only probability of getting correction is 25%. If you eliminate 2, probability is 50%. So use the elimination method for MCQs in practice every paper, whatever MCQ is there. That is another thing that we told, MCQs we told. Then, now I will focus on something important. In the exam papers, number 1 is attend the easy questions first. You may take accounts paper or like management costing or whatever, that paper, there may be like bigger questions, tougher questions, right? And you may have studied that on the day of examination morning also. But if the same question comes in paper also, don't attempt it first. Because it will take you time, and sometimes if one small error happened, then you have to cut it off again, then do it, the confidence will be gone, time will be gone. Always attempt the smallest and the not even smallest, easiest questions, small questions, 5 mark questions or 7 mark questions, practical papers. So only attempt that. For management accounting, this one, corporate accounting and auditing, I would say don't touch accounts first. Go with auditing first, because auditing, the game is, it's pure theory. You write 777, so many questions will be there. Pick 2, 3, 4 questions which you easily know. Complete that first, because it is actually in your brain now. Sometimes after 2 hours you will forget that because it is theory. You will forget the same point. So immediately when you get the paper, take it and write it for the first 2, 3, 4 questions, whichever you know. Straight answer, you know, point, write it everything. So by 2:30 itself, your 20, 30 marks is done. The other tougher areas which you are not sure in the auditing, leave it. Just mark it and leave it. We'll write it afterwards. Now go with management accounting. Solve the easiest questions, you know. Solve the toughest questions also, you know. By around 4:30 something, come back to auditing and write the remaining 10, 20 marks. That would be better approach for your auditing. And all the other papers also, easy questions first. Easy, smaller mark questions first. Because you need to get that momentum built up. Momentum, slowly, momentum. Because when we solve one question correct in the answer, even if it's 5 marks, our confidence builds. Even if it's a 15 marks question, one is getting wrong, our confidence is gone. That is first thing. Then, in examination, this table, everything is actually not needed. You can draw it with your hand and pen also, scale anything. But good. If you're drawing it for some very big questions, for sometimes you need 3, 4, 5 headings in the table. If you draw it without a line, it will be messy in the book. So that time you can use a scale. Always go with a 30 centimeter scale. You don't need a small scale like this and this. Go with a bigger scale. 15, 20 rupees is needed, right? Keep it. Then, how many questions are there for you? Like optional questions are also there, right? 8 questions are. Optional is also there. You can leave one question, right? Okay. Then one thing I would say, optional 8 questions will be there and 5 is only compulsory. So 3 you can leave. 5 you have to attempt. Okay. Then I'll give one suggestion. I don't know whether this applicable on CMA. You just check it. I'll just say you see whether you talk with your CMA seniors, because I don't know how ICMA gives mark on this. In CA we have like 6 questions. Out of that 5 you have to write. When I was writing, now the pattern, small changes are there, but I used to write all the 6 questions. If for time is there, like some papers time will not be there, we'll only write 5. But some theory papers, I was so fast, I was so quick in writing, but my handwriting was messy. Anyways, we won't know 1 or 2 answers in the question paper. So I don't use to, because when we write 6 out of the 6 questions, they'll give the best marks of 5. Best 5 they'll give, best 5 they'll take mark. They'll value all the 6, and whichever question has the best 5 marks, they'll take that. But I don't know how it is in CMA. So just ask your seniors on that, or I'll also ask. I'll let you know. Then, because the benefit is that sometimes in a practical paper, you may not even know, sometimes you only have studied 80%, you may not know 2 chapters. So 2 questions you may not know. Anyways, 2 questions you don't know. You are just blindly writing something. One question you may get 2, 3 step marks if you write that. Other you may get only 1 mark. You don't know. So better if there is an option, time is also there, then only do it. Not necessary. Just giving you this. Auditing keywords you have to underline. Whenever you are writing a keyword, for example, verify the fixed assets with the fixed asset register. Fixed asset register. Verify the inventory with inventory, investment with investment register. All the keywords underline. Keep it. And practical papers, when you write and when you get the final answer, P&L, balance sheet, everything, final answer, if you are so sure that your final answer is correct, 100% sure, then put it in a box. With a pen, put it in a box. But if you are not sure, don't do that. What will happen is that if you put it in a box, answer is wrong. If you put it in a box, the invigilator will come, he will only see that answer is correct, tick entire 7 marks and go. Because he don't have time to check your paper. He finishes 3 hours you take to write a paper, he finishes it in 10 minutes, that paper checking. So if the final answer is correct, tick 7 marks, not even steps he will not check. They'll say step marking, everything is there, but I have seen people checking paper. So this is how they do it. Tick, 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 they'll go quick. So, but if you are not sure, don't do this. Because if your answer is wrong, your step marking also you may not get. He'll cut it completely and boom. That is one point you have to keep in mind. Then, formative provision, don't drink. This is an exam writing tips. Some exam day tips I am giving you. Before going to the exam, don't drink water too much. One attempt, I was, oh my God. That is a very big problem. Examination 2 hours before, don't drink too much water. Use your bottle and sip water. And the last 1 hour of examination, have as much as you want. There is not a problem. Keep that in mind. Because small things, but matters. It literally matters. Small things. Then some basic things like what are things you need to carry, for example, 2 calculator, 2 specs, all these things. You don't need to, you don't want me to mention that. Day before exam? To maintain that revise. I can give you some tips that I used on 1.5 day. Number one is, oh, you don't even have 1.5 day, right? You only have 0.5 day. Okay. Oh, 1 day totally. I would say, number one, in auditing, when you're studying now, you know what are the tougher questions for you or something. I used to stick it onto a wall and keep it. That is one day. So 1.5 it's very easy. I'll see that question 3-4 times when I'm seeing in that 1.5. That is one thing that I used to do. But other thing is that always have a, because you can only revise it one time in that only 1 day, because you are not getting time to read it 2 times also. So I'll say one thing. Imagine today evening you come back from a paper and tomorrow noon you are having auditing and corporate accounting examination. I would suggest learn auditing tomorrow morning only. Like today you will be learning the practical paper, right? Auditing, if you learn tomorrow morning fresh, you can go and replicate it in the paper. So, or imagine you are learning it today evening, auditing, any scenario. Learning it today evening, you are learning the chapter number 1. You learned something. But now around 12-13 hours is there for your examination. Sometimes you may forget that. Sometimes you may forget some important or tougher areas. So always in that 1.5 day, either have a flag with you. Some important questions which you will forget, which you also know, right? When you're reading, I will forget this question. Put a flag in that page, or write the page number somewhere else, or put something, or in a, I used to have a, like a mistake register, something like 1.5 day register. I used to write that question in that. All the tough questions, whenever I'm revising, I used to write that question only there. And the mnemonic also sometimes I'll there. So tomorrow morning, just before the examination, I can just go through all this stuff quick in 1 hour. So you have written all the stuff you will forget. So just revise that in 1 hour just before the exam. So it's a second revision happening. If you don't do this, you may not even know what are the stuff that you will forget. So that is a problem. I used to revise 2 times in 1.5 day for CA examination. That is, I'll use 80% of the time to revise once and 20% of time for this. Important stuff I'll forget, I'll revise in that. Got it, right? An idea. That is one more thing. Third is if you have a whiteboard with you in your room. I used to have a very big whiteboard. Whenever I'm studying all the equations or something that I used to forget, I used to write it down on the whiteboard. Like in the 1.5 day, tomorrow there is an equation, for example, sometimes plus or minus, we'll miss that. Same equation, plus or minus, we'll sometimes put plus instead of minus. So that all those small errors, I used to write it in the paper, the wall. That is another thing. Another stuff I can give you, pictures, taking pictures in the 1.5 day. Practical papers, so not theory is not that much recommended. Some questions may be very tough for you, right? Whatever I told you, like write the question name on that sheet and revise it on the next day morning. Similarly, practical papers, all the tough questions, you're reading this, okay, question number 3 is very tough. If I don't look at this tomorrow morning, I may forget. I used to take a photo of that and keep it in the phone. So sometimes tomorrow I'm traveling in a bus or something, I can easily swipe through the the tuck, I can finish it. So that was one more thing that I used to do. Then, anything else? This much is only the doubt you have. In the basic stuff, how to attend the paper. You have 100 marks paper, right? So some people will say 1 mark, 1 minute, some strategy like that. Never worked for me. One thing I can say to you is that if it is working for you, the best thing. But for me, it was not working. So one thing I can suggest is that always follow a macro approach. Don't micromanage yourself and stress yourself too much. Mental game is the game. It's actually the mindset that will keep you pushing in the next 30 days. Because if you don't have a really good mindset, a strong mindset, a warrior, a fighting mindset, you will not be able to study 12-14 hours in the next coming days. That ultimately this mindset, where it comes from? Your obsession towards the decision you have taken. You have taken that you are going to do CMA, you have taken that you are going to do CA, whatever it is. So you made this decision and you have spent money also. Spend money, time, everything. Now if you do it in an average effort for the next 10-30 days, sure shot that will never give a result. But give that whatever you can, like die for the next 30 days, I am saying. That is how you need to go with the last Weird. I used to tell when exams were happening, people will say sleep, food. I used to sacrifice everything. I just don't care about anything. And it's all about mindset, bro. Some people will say if you don't have the proper food, don't have the proper sleep, it will like you will be feeling sleepy, tired. Let me ask you about the soldiers going for a war. Do they get a proper sleep for 7 days? Do they get a proper nutrition? Nothing, but they are functioning. These damn things are actually excuses people saying to you. Or yourself also. Today morning I have not had food. When I was coming, my friend, like she called me and she asked me, "What have you had food?" I told no. Then how you will have the energy to speak in front of people without having food? I had food yesterday evening 8 o'clock. Till now I have not had even a single food, just 3-4 coffees. Nobody can do this, but this is the mindset. I decided I won't have the food. Let me see whether I can adjust. Still I am not feeling hungry. Now I have the reward. I can go and have whatever I want because around 16-17 hours I fasted nearly. So similarly, it's purely about the mindset. You will feel lazy, you will feel tired, but keep pushing, because if this thing is strong, everything can be sorted. Sleep, this one. Anyways, you need to get good sleep. But I'm saying, don't take excuses. In noon, you are feeling tired. Two options are there. Sleep for 15 minutes, wake up, study. That's a power nap is necessary, only needed. Or sleep for 3 hours. That decision is what changes your resultant paper. So keep that in mind. So that's it. Chalega. So we'll meet anyways, and that's it. And guys, attending it on live on YouTube also, keep this thing in your mind that you have to get it done in the next 40 days. Average effort will not take you anywhere. It's purely about this thing. Give your 120% on the next 40 days. Get obsessed and get it done. And see me once your result comes after May exam. Just at least if you cannot come, just text me. Everybody has my number, right? I just want to know yours. Even if you win or fail or something, whatever it is. But I would say, if you study, and CA and CMA, one thing, if you study at least 80% of syllabus, you will pass. Not even 80, 70% of syllabus properly, there is no chance that you will fail. It's always the process. Trust the process, not about the results. So that's it. Chalega, bye bye, and I'll see you. And guys attending on live, bye. Some people are watching and then working in the